the skills development, and the digital transformation initiatives in the country. That's really what the item is about, Chair. I hope that really suffices. Thank you very much, Chair.
Thank you, Dr. Mudube. Dr. Mudube, before I release you, I know we will get the concept document, etc. But whilst we got you on the line, can you just briefly indicate to us, when we made the decision for the study tour to China, there was China and there was India. First, there were cost constraints that we had. Maybe what informed our decision then to go to China on the international study tour?
Indeed, Chair, Parliament would ordinarily, one of the internal policies or processes, it's that whenever there's a study tour, any of the committees that are allowed to tour or to do tours to 2 countries at any given time. But what then is a constraint, is budgetary constraint. What would then happen? Parliament wouldn't then allow the entire entourage or the entire a portfolio committee, to undertake, those study tours. What then between ourselves and the chair, the discussion that we had at least was that instead of going to 2 countries, initially we had India and China as the countries of choice. But what we then had a conversation with the chairperson was that instead of, doing 2 countries, which would be, the cost would be still exorbitant. Then the chair suggested, at least between the 2 of us, that why don't we do 1 country that would afford the entire entourage or the entire committee, the full complement, membership of the committee to be in attendance. That's really one of the primary reasons why we then had to choose between India and China. It's really around the cost constraints and being able to afford the entire committee membership to be in attendance, during the study tour. Thank you very much, Chair.
Thank you, Dr. Mudube. I'm sure in a later stage you will give us the concept document of that intended study tour to China. But thank you, Chairman Kosi. Thank you, Chairman Kosi, and thank you, Dr. Mudube, for that taking us through this first-term program. Colleagues, there you have it. The presentation has been shared. I now afford you an opportunity to engage the program if there are any inputs and additions from members. I see no hands going up. Honorable Singh.
Good morning, Chair.
Good morning.
Thank you. Good morning, Chair. Good morning, members and officials. Chair, I would just I think you did mention the issue of the study tour and the details and the concept document. I would really like to see that being put on the program. So if that could be an inclusion and we know when we will be briefed about it, I would appreciate that. The second thing, Chair, is that I know the dates now have not been confirmed, but I would just like to know what the new proposed dates for the study tour are so that we can just be mindful of those dates in advance in terms of our own diaries. And lastly, Chair, the draft bill that was being submitted, I think, to the minister and then would go to cabinet, etc., regarding the whole USASA situation. I think all the members were in agreement who were at the oversight that we should get a complete briefing on that to understand the situation and the timelines. So I would like that to be included in our first term program as well. Thank you, Chair.
Thank you, Honorable Singh. Honorable Bodlani.
Sorry, Chair, I'm trying to unmute myself there. Thank you so much, Chair. Chair, I think for me, it's really one thing. The presentation by the legal services on the 3.8 billion. Is there any way we can bring it closer? Because I think putting it in mid-March when the conversation is on the table, it would really assist us to shape the conversation as the portfolio committee if we could bring it closer and not in March, as it were. But if that is not possible, then I'm happy to withdraw that suggestion, Chair. Thank you so much.
Well, thank you, Honorable Bodlani. Colleagues, if there's no further hands, maybe let me just indicate to maybe let me then also then indicate I had shared with Secretariat, we must be considerate that there are other that colleagues do sit on other committee meetings on Fridays. And our position should be, unless there is no other opportunity for us to having it on a Tuesday, then Friday should be the alternative day. It should not be the default day. I think we should approach that with that mindset, more so that we don't compromise colleagues who are also sitting on Friday meetings, where largely the governance cluster sits on a on a Friday. So I have shared, for example, the SCOAC program with Secretariat. There's only 6 meetings, and I would then request Secretariat to look at that and see that we try and not conflict with that if it's possible. Maybe let me allow Tembigosi and Secretariat to just respond to the requests made by Honorable Singh and by Honorable Bodlani before we take a decision how to proceed.
Thank you, Chairperson, and thank you, members, for those contributions. Chairperson, just to respond firstly to the Ms. Bodlani's proposal for the presentation by legal services to be moved forward. Chair, perhaps I can check with legal services if the committee allows, then we can perhaps have that briefing jointly with the meeting that we're planning for this. We can have it as a second agenda item in the meeting that we're planning for Friday the 6th. And Chairperson, just also to speak to what you raised regarding the Fridays, perhaps maybe for this coming Friday. I am aware that there are members that have sitting committees. Perhaps the meeting with the ministry, the department, and BMIT on the SABC funding model. If the committee allows, we can perhaps move it to 1300 or 1400 until 1600, and we can even include the proposed item by Ms. Bodlani on the legal opinion on the 3.2 billion to SAPO. And then if I could respond to Ms. Singh's questions. The first one, the dates for the oversight for the international study tour. We'll share this program, ma'am, just to rectify, because on the program that you currently have, it would indicate 30th March to 5 April, but the actual date is the 28th of March till the 4th of April. 28th of March is on a Saturday. It's a traveling day. And then to arrive on the 29th, and the official program starts on the 30th until the 3rd of April, which is on a Friday. And the delegation then be traveling back to South Africa on the 4th of, on Saturday, the 4th of April. And on the second comment relating to the draft bill on USASA, we will look into the program, and if we do find space, we will include it. But if not, then it will be prioritized to be included in the next term's program. Members would have seen the presented program is quite congested. It's quite congested. Sometimes we really have to work around the Parliament's program, the parliamentary program, to try and see if we have slots. It was then that we're also allocated the Friday, but like I said, we can play around with Friday, perhaps meet in the afternoon instead of the morning, but I'll be guided by the committee. Thank you very much, honorable members. I hope I have responded to all your comments and concerns and questions. Thank you.
Thank you, Chairman Kosi. I think you have sufficiently dealt with both my concerns and the concerns of Honorable Bodlani. Thank you for this proposal that we, Friday the 6th, I support that we start at 2 p.m. That will then allow members who have got their first committee meetings on Friday mornings to attend those meetings there, which are equally important because their first meeting sets the tone for the year, as well as these are first meetings are adoption of programs for the year. So we don't want any members to be prejudiced of those committees. So I think the suggestion of starting at 2 p.m. on this Friday is welcomed. And also you've indicated that you will then try and bring the legal services opinion in that item there. And then you've also responded to Honorable Singh's concerns regarding the birth of SASA, as well as you've clarified the dates. Colleagues, I think Secretariat has assisted us in accommodating our requests. I don't think we need to defer the adoption of this program. May I therefore then ask colleagues to assist me so that we can adopt the program before us with the additions that Secretariat has suggested. Honorable Matafa.
Thank you, Chair. Good morning, Chair, and members of the executive, everyone on the call. Chair, I move for the adoption of the program with amendments as presented. Thank you so much.
Thank you, Honorable Matafa. Colleagues, can I get a seconder for the adoption?
I second.
Thank you, Honorable Bodlani. Colleagues, with that, our program has been duly adopted. Thank you so much, Secretariat, and thank you so much, Honorable Members. Honorable Members, the next item is the adoption of the committee minutes. May I then request Hajira to take us through the minutes that needs to be adopted. Hajira.
Good morning, Chairperson. Good morning, members. Members, the last set of minutes was on Tuesday, the 2nd of December 2025, where we dealt with a briefing by the department, GCIS MDDA, on the second quarter performance and financial report. I'll slowly go through the first page, members. That was just the attendance. And then the second page, further attendance. We had the opening and welcome. We adopted our minutes of the 25th of November. We then had the briefing by the department on the 2025-2026 second quarter performance financial report. And there were opening remarks by the Deputy Minister in the presidency after that. These were the opening remarks. We then had a briefing by GCIS and MDDA on the second quarter performance, and that matters arising was that DCDT would respond to outstanding questions in writing by the 5th of December, and also a report would emanate from this. Thank you, members. Mr. Prati.
Members, members, we have received the review of the minutes by Secretariat. May I then request if there's any inputs or additions to the minutes before I request your assistance to support its adoption? There are no additions or improvements. Can I then request your assistance to adopt the minutes, colleagues?
Shall I move?
Thank you, Honorable Bodlani.
Chair, I second.
Thank you, Honorable Singh. Colleagues, thank you so much for assisting us in adopting both the committee program as well as the minutes. We now move to the substantive part of why we have gathered here today, and that is to review the first and second quarter performances and financial reports of Postbank, SABC, and SAPO. Let me then indicate that we did try to incorporate the third quarter reports, which would have brought us up to at least December, but we were informed that these reports are presented to the department by the 30th, and that process hadn't been done entirely. Hence, we are going to be adopting in this meeting, and in subsequent two meetings, we'll be looking at the first and second quarter reports. Let me then invite the Honorable Minister Solly Malatsi for his opening remarks before we move and ask him to then lead us to the entities. Honorable Minister Malatsi.
Thanks very much, Chair, and good morning to you and the honourable members. This is our first engagement of the year, and I'm looking forward to it. And also, just to welcome back some of the returning members to the committee. I think it was stated that Honourable Makubela and Honourable Ndlela are returning to the committee, and also those new members, Member Hendricks from the Patriotic Alliance. Chairperson, as you have indicated, we are having three entities. The South African public broadcaster. We also have SAPO and also the Postbank. The entities are led by the respective chairpersons who are leading their delegations. In the case of SAPO, one of the business rescue practitioners is leading the team together with the management. And I think in the interest of time, Chair, rather than belabor into a brief assessment of where we are, I think the challenges that the committee is aware of continue to prevail, much more so around the financial sustainability of our entities, and primarily that linked to, of course, the funding provisions and challenges that they continue to face. But when you look at the actual quarterly reporting, there is modest progress that's being done across all the entities, which reflects a lot of the work that the management and the stewardship of the entities are doing. But I think it's better that we let the details speak for itself, so that the engagement can be more on the presentation. So I would limit my input to that overview, so that the chunk of the time is dedicated to the actual presentations and the interaction that we would have on the basis of that presentation. From the department side, we are also joined by the Deputy Minister, the Acting Director General for this week, that being DDG Masholohu. We've got DDG Ngobeni also in the team. But I think it will be proper that when each of the entities speak, the chair also introduces, or the head of the delegation introduces the rest of the delegation's chairs, so that we can move beyond the administrative issues of introductions and spend a lot of time on the substance of our engagements. Thank you very much, Chair.
Thank you, Minister Malatsi, for your brief comments and welcoming remarks. Let me then invite the chairperson of Postbank, Mr. Ngema. Let me invite you to the platform, sir, for your opening comments and to lead your delegation into your presentation. It's 9:38. You have at the most 30 minutes for your presentation, so please incorporate that in your opening comments. Mr. Ngema, chairperson of Postbank.
Apologies, Chair. I was struggling with unmuting. Trying to do the camera now. Yeah, thanks. Apologies for that. Chair, and thanks for the opportunity and compliments, if that is still allowed, of the season, since this is our first meeting. Thanks, Minister, Deputy Minister, for the introduction. In a nutshell, Chair, I'm going to hand over. I'll introduce the CE. We've got a few people in attendance, but I'll introduce the CE, who's going to be the main presenter of our report. Key issues, Chair, that we're dealing with is the transition that the bank is doing from the stabilize the bank to build the bank. So this is the work. So all along we've been doing work to just consolidate, stabilize, make sure that we're a reliable service provider. And we think, give or take, whatever happened there and there, we've done that, including to our principal clients. We've delivered on a regular basis.
But as much as we're comfortable with that, we know that for us to compete as a bank, we need to do more than that to position ourselves to be able to compete with other banks, because we're a bank that's in a fairly competitive market. So to do that, we've got to do certain investments, especially from a technology perspective, but also from building the business processes as well as from the banking skills, building the skills of the bank so that we're able to operate in a manner that's similar to that. So a lot of what we're doing is the build the bank. But of course, within the stabilize is to deal with the regulatory compliance issues. So the work that we must continue to do in terms of variation notice 4, CE will speak to that. And when we reference the third quarter, I know we're not dealing with the third quarter, Chair, as you said, but I'm sure CE, where it's required, might refer to some of the things that happened in the third quarter just for completeness. Although that report will come in when we come in for that particular presentation. So we're making some progress on VN4 going forward, but we obviously are watching that carefully, and obviously we're always on the watch for our key customers to make sure that they remain happy with us, and we do what we need to do to stabilize those relationships. In the interest of time, Chair, I'm going to pass on to the CE for now to kickstart the process, and we'll come back for questions where required. Thank you.
Thank you, Chair, and good morning to the Portfolio Committee. Good morning to the Minister. Good morning to the Chair of the Portfolio Committee. Good morning to the DM, the DDGs, and the acting DG, and the colleagues on the call. Chair, please give me, we struggled, we don't have electricity on our side, but I think it's coming. I probably will show my face now in 5 minutes. I'm also struggling to upload from my side. I'm asking my colleague to just upload the presentation on my behalf. So please, apologies about that. The Secretariat, you can upload the presentation for me on your side as well if you have. I'll appreciate it. Thank you.
I'll check for it.
Thank you so much. You can move to the next slide for me. Chair, I won't waste too much time giving this background. Safe to say, I think
CEO, we can't get it. We can't hear you.
Oh, my apologies, Chair. I am muted. I thought I was speaking. Safe to say that the background to Postbank, what impacts us is probably everything that impacts just the economy. I think directly Postbank will always be impacted. That was just the background of the presentation. You can move to the next slide. Thank you, Secretariat. As the Chair said, we will touch on Q1 and Q2. We'll speak a little bit about Q3, just as a highlight to show that there is progress within the business. And the next slide, you can move to the next slide. Thank you. So that's what we will be dealing with. Just maybe some context, you will see that in Q1 and Q2, we have slightly different presentations. And the reason for that is that we did, an opportunity was given for all entities that as there was a delay in the budgeting, if there was any changes in terms of the strategy, in terms of the APP that any entity wanted to submit, they must submit. And we did take that opportunity just to make a few slight changes. So the presentations are reflecting reflective of that. The changes have been submitted and have been approved by the Minister. So that's why we are able to report on the new APP in inverted commas for Q2, but it is not much, Chair. You can move the next slide and the next slide for me, because I think that was just giving the context. I think for Postbank, perhaps one of the first things that we should talk about, the two things that I think for our business, perhaps three that I think are fundamental for our business. One, as much as we did well with the variation notice number 3, of course, we had the conversation with the Reserve Bank, and there was an outcome of that was variation number 4, which really technically had about 3 conditions. There's a lot written in the variation if you read what is gazetted, but most of it is to confirm some of the discussions we had with the Reserve Bank. For instance, that the current black card should continue to be in use. The current black card should be used to replace the balance of the people who have the gold card. So that's what's in the content, and therefore it makes it look long. But actually, the 3 real conditions for variation 4 that where there is that we need to improve on the key management, which we have. And also, we need to ensure that we then replace the current gold cards that are left. And then, of course, the third one was just to ensure that we maintain, in summary, our compliance that we've achieved in the past with variation number 3. So it was gazetted now in October 2025. I think the good news, though, is that we did not wait until the gazette, because if you recall, variation number 3 was closed in March of 2025. And therefore we started, because we knew the conversations we were having with the Reserve Bank. So we started on working on whatever it is that was that they needed us to improve. So by the time the variation number 4 was being gazetted on the 29th, we had already started on the work. As a result, as we sit here, we actually have completed the key management that was outlined, and the Reserve Bank did come. They observed, they signed off on it in the sense that, because that's what we agreed on, that this time around we'll incorporate them in everything that we do. They came. In fact, good news is that some of the feedback we received from them was that there was a few items that we did better that they're taking back, and they might actually start to call on those even across other banks. So that was good news, that we're setting the bar quite high for Postbank. I think the other good news is that we have now produced Black Card 2. I think it's important to always mention this, that this will not impact customers. Customer account number stays the same. Those who are sitting with Black Card 1 will remain. By the way, this Black Card 1, Black Card 2 is only for internal. All customers will just have a black card. It's the same. It operates the same. It is just for internal use that we use that terminology. So we've already tested it. The good news is that it has tested well with all banks. We finalized now the testing now end of January. So we are now about to produce it because you use a test card, so we're about to produce the actual card. So like I said, we did not wait until the gazette. We started working on what we know so that we can start distribution as early, if possible, by June, July. That's what we want to start distributing to the majority, to the rest of customers, which is just less than 500,000 that have the gold card. So that's I think that one thing, though, to mention is that, unfortunately, with the variation notice, and it was with variation 3 and variation 4, the limitation that the Reserve Bank does put is that you cannot do new business, card business, which means you cannot open new transactional accounts where you will issue a card for customers, which then puts a limitation for us in terms of customer growth. I think that's the one thing to mention there. I think on the capacity expertise within the bank, we are moving on that. We really are progressing on that well. It is a limitation, but I think we're progressing well. The next slide. I'm going to try to run very quickly on the rest. I will leave these I thought just to contextualize on strategy. I've included a few slides to say how have we performed as we're about to close the financial year. How are we tracking on strategy? Good to mention that we are really have stabilized the business. We have started our build phase. In fact, we have now signed on our new strategy with the board. And we've changed the block number 2 to build and grow, because we believe that there's still a lot of building that the business has to do. I think it was quite optimistic of us to think we could stabilize and build in 18 months and finalize everything. So we started that, and happy to also, I think, report that our core 2 big core infrastructure, banking infrastructures, we've already started on that. On the one, we started building on it. It's going live now before the end of this financial year, and board has just signed off on the other one, on the business case. So even on the build and grow phase, as we will call it now, the next phase, we've started that work. So I'll skip this slide and the next slide. Because it was just giving an update. This slide was just giving an update on the stabilize. I'll skip it. I'll take it as read, but all good news, even this slide. Because I just want to go to the performance. Thank you. Okay, so let's go to Q1. So Q1, the next slide. So I just put them next to each other here. So for quick reference, the business in Q1 ended on 60%, and we progressed on that. On Q2, we've improved on that. In fact, on Q3, we are now on 83%. So we really are progressing well quarter by quarter. And on the Q3, as much as it's not being reported today, I'm just mentioning it. It has been signed off. It has been audited. It has gone through board and signed off. So that's why I can firmly confirm the number that Q3 is going on 83%. But we have seen progress. And then the 4 that were missed on Q1 and Q2, I'll speak broadly on them. I think you'll see there's on the 4 that were missed in Q1 and Q2, there's 2 out of the 4 on both quarters that are common, that were missed on both quarters, which is really speaking to the challenges that we spoke about. The rest were just technicalities, which I'll explain very quickly now. Okay, you can move to the next slide. Thank you very much. So on the achieved, I'll go very quickly. I think at least profit before tax, good news, because like I said, we had budgeted a loss. The cost to income, we've done well. I think the work we're starting on culture transformation in the business, and also implementing in terms of accountability, performance management, the progress and the work that we're doing there, we're on track. The next slide. And then the other 2, as we improve, as part of stabilizing the business, one of the things that we want to do is standardize, because you cannot bring systems, infrastructure, IT infrastructure, if your processes are not standardized and they are compliant. So that's one of the things that we targeted for this year, and also just managing some of the strategic risks, so that we ensure that we sustain or if not improve on our audit outcomes. And the next slide. And then on the ones that we did not achieve, so the one that we just slightly missed, which was just unfortunate, was the budget was on 64, and we just achieved 163.2. So we just missed it ever slightly. Was the interest income that the business make. The business is unfortunate that we do have depositors, that our customers who still deposit with us, and for the income that we make out of our deposit book, which is just less than 10 billion. So that is good news. And the good news as well is that people are keeping on trusting, at least, to keep their deposits with us. I think there's challenge in growing the book, and most of that challenge, of course, is around infrastructure, which we need capital for, because currently we do know that Postbank is not well represented in terms of branches. We don't have branches. Postbank has never had branches, except working out of the post office, which that infrastructure was not necessarily banking, and we've seen the challenges with that. We still working with the post office as much as possible, though, to still keep at least those customers, if they still want to transact, those who keep their deposit, they still engage with the post office. But in terms of just ability to bring more deposits, investments with that is a challenge because of that. And then on the income interest, I think this is the biggest one that we challenge. It has been a challenge. I think there's three things mainly. One, I think optimistically, the budget was quite high because we really believe that we're going to close on the variation notice number 3, which then gives us the ability to bring in more transactional income, because that's how you earn non-interest income. And now we know that did not happen, and that continues, that blockage and that hindrance, or at least that limitation of not inability to bring new customers is still there. In terms of, we can bring those who are depositors, but you can't bring transactional customers for your normal check account, transactional account, which is really where bank really starts the relationship with the customers, that you open a banking account. So there's still that limitation. I think the other challenge here is that there were some costs that were delayed, that came in through the two major costs that keep on delaying. I think it is in the work that we do with the retailers, and you'll see it even in the next quarter, that impacted that. But also, I think reduction in customers, absolutely, there has been a reduction in customers. Firstly, you can get some non-interest income even with those who deposit with you. But because we don't have the right infrastructure in terms of that transactional ability, but really through a card, that's really where you make most money, through a card. So some customers, because our infrastructure and our availability is not most optimal, because we don't have the capital to build those, and I think we've made that cry quite a few times. Some customers, of course, out of frustration, they've changed banks. We know that, of course, there were some customers that we lost during the card swapping, and most of those, I think, were also just a confusion, because some of them really thought the grant payment is linked to the gold card, which said SASA on top. If you recall, the gold card was written SASA on top. So they thought that they now had to go back to SASA and change banks, because the gold card is no longer be there. And we've learned that, and we're going to try very hard to ensure the communication in this distribution that we're going to do now is very clear with the customers. We do know that we also lost almost 500,000 customers, about just over a year ago, that when SASA in fact, we do lose customers across, I think, month and month, because SASA does do evaluation of their customers to see if they still qualify for a grant. Some of them are deceased, of course, and those that they suspect as people who might have submitted even for a grant and yet don't qualify, or some who submitted more numbers or incorrect information and therefore not qualify for the amount of grant. So we do lose those customers, and because we can't open transactional accounts, we then miss out on closing that gap, because you can lose from the bottom, but if you don't close on top by bringing new customers, it becomes a challenge. And these two are the two that I'm saying you will see as well in quarter 2, as one, the one on interest is slightly missed even on quarter 2. The next slide, thank you. And then these ones were just really unfortunate. 2.3 was just unfortunate because we just missed that in terms of submitting that within the quarter. The work was done, it was complete. It was just the submission of ensuring that it was done within the end of that month of quarter 3, but we have since caught up on that. We are doing the financial education, and I think on section 5.1 on the banking license, I think here the latest update, by the way, on this one is that the Reserve Bank, I personally had the meeting with the Prudential Authority. They're saying Postbank unfortunately has to go back and submit section 13, because our section 13 was submitted 10 years back, back, and they believe that it needs to be refreshed. And now the new rule is that between Section 13 and Section 16, there's 12 months. And here the challenge is that because it's easy to submit Section 13, that's not the challenge. Because Section 13 is really your plan as to how are you going to build this bank that you want a license for. But the real measure is what you do between 13 and 16 in terms of implementing what you had promised. And I think the biggest challenge for Postbank will be that 12 months, because if we don't have capital to build on what we've started, then we will not achieve we will not be on time for the submission for Section 16. And of course, then the other challenge is the capital adequacy that the Reserve Bank needs any bank and every bank to have, which again is something that the bank needs to be capitalized for. And again, you're going to see this one. And then we can move quickly to Q2. Q2, again, I won't go through what is achieved. I think safe to say that, again, cost to company, PBT, value-added services in terms of the work we're starting as we go through customer, bringing more value to the customer quickly. On the next one, thank you. I'm mindful of time. And then, of course, talent management as we start to work on our HR side, whether it's culture, performance management, ensuring that we grow our talent, ensuring that there's measurable, ensuring that our employees' wellness, and of course, continue on the culture. So we are on track for those things. And again, on the process standardization and improving and recording of our processes, so that as we bring the IT infrastructure, we have that. So that continues to on track. I think again on the ones we did not achieve, you can go to the next slide. Thank you. So you will see, sorry, you can go to the previous slide for me quickly. You will see again on net interest, we just slightly missed it. It was 166 for this quarter. And then we achieved 163.7. So that's good. That one will continue to be a challenge. I think the main challenge, by the way, on net interest was not even necessarily on customers and how we invest what we have. I think the biggest challenge there was the fact that the interest rates over the last, I think, 3 quarters have gone down every quarter. So it does put a strain on interest income that you earn, obviously. And then on the non-interest, I think I've spoken about this around customer, around infrastructure, around not being able to bring in more customers because of the variation notice number 4. And then I'll go on the financials. I think I'll focus mostly and mainly on 2 slides. Thank you. You can move for me, so that we can allow for. Okay, on these ones, I think the 3.1. Thank you. Actually, 3.1. This one we made a strategic decision. We have submitted this. This work has been done. The short incentive scheme proposal has been submitted. The only difference here is that we decided to insource it because we wanted to manage cost, and also I think we acquired the skills, and therefore. We do not achieve this only because we said one of the targets we need to achieve in quarter 2 was to ensure that we bring the company to help us, but we decided to do it internally. Therefore, we've achieved what we wanted, the outcome, but it's the how that was really. And then I've spoken on the Section 16. And then we can go quickly on. I'll focus on 2 slides on the financials. I think I've focused, Chair. I've just flighted and shared Q2 here because Q1. I think the presentation that was I thought because it has progressed since. So I'm focusing on Q2. The good news is that yes, we coming out positive in terms of our profit income, although we had budgeted a loss, as you'll see there, 124. Yes, this is really a combination of a few things. I think cost management, and also I think interest income is saving us here. But in terms of sustainability of this, yes, I think even when the minister introduced, I said the reoccurring theme is the sustainability of the businesses. I think Postbank is doing, and I think Minister also noted that although he recognizes that the businesses are doing everything in their power to try and and ensure that we keep the business alive. We ensure that we don't run a loss-making business. But in terms of that sustainability going forward, years to come, it's going to be a challenge. I think the same with Postbank. We are coming out profitable because we're managing the business efficiently. We're not being wasteful as much as we need to implement some of the projects. Yes, some of them are delayed simply because of timing and maybe in procurement, but we're on track with the core big ones, like I've spoken about the 2 core banking systems that we're targeting for this financial year. And one of them we're finalizing, it's going live by the end of the year. The other one, the business case has been signed. So some of those, so those are good news, but we are coming out profitably.
Recording stopped.
So can I please go to the one on the expenses, because the portfolio committee did say they wanted to focus on those 2 expenses. We are below budget again. You will see that the budget would have been 537. We're coming out at 316, and even I think even now in Q3, as much as some of the projects are starting to come in, but we're still under budget as we watch this line very carefully. And then the next, the last slide, I think I want to jump to the last slide. That really talks about our ratios. I think it's the last slide. I think that, yes, thank you. The ratios, as you will see, cost to income, we're managing it under what was budgeted. Of course, capital is still a challenge, so we know that. And then the next one, I think the next 2. I think there's okay. And that's it, Chair, and that's it. So overall, Postbank, I think very good progress on the variation notice number 4. We're ahead of the 15 months that we're given. The card has been tested. We are still profitable as a business. We're managing our cost very well, and we're bringing in resources as much as possible. Thank you, Chair.
Well, thank you so much, CEO. Chairperson, are there any additions from you before we? Chairperson of the board?
Thanks, Chair. I think we'll say more in the next. I'm under a letter of warning, Chair, from my COSEC and board members about my camera skills, but I'm managing them. Chair, I think when we report on Q3 especially, we'll say a bit more about the variation notice things especially. And one of the things we will come soon to the committee to talk about is the plans around distribution of cards. Because of some progress we've done on the variation notice, at some point we'll be distributing cards. So we will brief the committee in due course regarding that. But yeah, so we have the challenges, Chair, but we are making steady progress, and we'll clarify further perhaps as the committee asks questions. But we admit both to the gaps that we have, but we are making steady progress in trying to resolve the issues in front of us, Chair. Thanks, Chair.
And thank you so much, Chairperson of the Board of Postbank, and to CEO for your presentation. Colleagues, I would suggest that we engage each of the presentations so that I think our engagement will be a lot more meaningful. So therefore, I'll open up the floor for colleagues to engage the presentation. I recognize Honorable Matafa first.
Thank you very much, Chair. Good morning once again, and let me start by thanking the presentation. Chair, maybe it's important to start with recognizing the progress that is being made and appreciating all the effort that is being put into turning the Postbank around. I only have one question, Chair, and it's with regards to the capacity in the institution. The report does state that they do lack certain banking skills, and there are efforts in recruiting senior management functionaries. My question, Chair, is what measures are there to ensure that those that are in the institution are capacitated to be able to perform at their peak in those areas that they are in? But secondly, is there any effort to try to infuse those skills that are not within the institution through maybe various programs with those that might have interest in those particular skills that may be required, but are not there and the people are in the institution. I'm not sure if I'm making sense, but that is my only one, Chair, because the staff is the most strategic asset that any institution can have and invest in. Thank you very much, Chair.
Thank you, Honorable Matapa. Honorable members, I know you might be reflecting. So whilst you are doing so, Honorable Patlani, and thereafter Honorable Television. Honorable Patlani.
Thank you so much, Chairperson. Chair, and let's thank Sis Nikki for the presentation. Sis Nikki is like me and you, a half full type of, the glass is half full, an internal optimist, and her energy is really felt as she makes the presentation about her passion for the organization that she leads. So I really should acknowledge that. Chair, the presentation talks about limitations on the issuing of new cards. Is it my understanding that because the Postbank cannot issue new cards, they are not opening new accounts? If we could just be clarified on that, because that is one of the biggest existential threats for the organization. And I know Sis Nikki spoke on that, but what does that mean as a state-owned organization? And she did speak about getting revenue from new accounts, but I'm not sure if I understand what the context thereof is. If you could just please clarify, I would appreciate that. And to say, what do you then do with a customer that is sitting in front of you looking to open a new account? Do you send them away? Who do you recommend? How do you make sure that that customer is not lost forever in terms of a potential client to the Postbank? Again, one of the issues that unfortunately are not covered in this quarter is the issue of office space for the operations of Postbank. Is the Postbank able to take us along in terms of where they are in terms of finding of office space? Because the last engagement we had with the organization, they were still having employees operating remotely. And that for me was a concern in terms of having a coherent organization and proper management of the organization. What is the latest on that? How far are they going in terms of getting office space? And I think, Chair, this is also on the back foot of our understanding of how leasing out office space. Also, just give me a second, in terms of what we saw last week, where some organizations are battling to find office space because of the fears that they may not be sustainable. The more Postbank speaks, the more I realize that I don't quite understand what their retention strategy is for their existing clients. And I know Sis Nikki has spoken in the past about how your commercial banks are able to have benefits for clients, and that was the vision she had. How far are we on that? Are you able to implement that? The consideration of the variation notices that you are getting from the SAP. What incentives are you putting in place for your current clients and prospective clients? And again, we find ourselves talking about Postbank not having optimal infrastructure. Chair, this is a result of a decision to dismantle the two organizations, Postbank and Post Office. And it is coming back to bite us, where we are now sitting with a standalone entity in the Postbank talking about infrastructure. But we juxtapose that with the Post Office, which says we've got a national footprint, but we do not have the business. And again, this also speaks to two businesses, two state-owned companies that are talking past each other. When one has the infrastructure, does not have the business, one potentially has the business, does not have the infrastructure. What stops us from collaborating? Because one fits into the other, and perhaps that solves the problem. What sort of engagement is the Postbank and the Post Office having on those, so that we do not speak like there is no alternative, and it is a big problem. But that said, Chair, I really think, to make my point, the separation of the two entities is really coming back to bite us as a country. What is the latest on the relationship with SASSA? We ended a year with terrible relations between the Postbank and SASSA. How is that relationship being managed? And how are we ensuring that SASSA clients also remain with Post Office as a preferred banker? I'll stop there, Chair. Thank you so very much.
Thank you, Honorable Bablani. Honorable Delisha.
Thank you very much, Chairperson. Good morning to you and the colleagues. Allow me, Chair, to not switch on my video. I'm using a handheld device.
It's in order.
You see, thank you, Chair. Postbank Chairperson is presenting a mixed report, in my view. I say this because they claim to be more stable than they were 2 years ago, you know, and this is because they have fixed the major IT system and I suppose they improved audit status. However, their core financial performance is still struggling. Another area of interest for me is that they have achieved 69% of their targets, right? They are earning less money than they had planned. And I see the chairperson saying, you know, it's just a slight, I don't know what her explanation was, but they are earning less money than they planned. And they are losing the social grant beneficiaries and other customers. And I think that is what is directly reducing their fee income. So it is my view that as I'm listening to them and you know, looking at the previous presentations that they had, is that the bank is severely undercapitalized, Chair. But I do admit that they do have a good cash liquidity. So my question then is, given that the bank, like Postbank, handles the grants of millions of vulnerable South Africans, you know, what is being done? What are they doing to inject capital and prevent a crisis that could stop once again the grant payments? Because that is a crisis that we don't want for the people that use their services. They admit losing customers, Chairperson, especially these grant beneficiaries, and the non-interest revenue dropped by, I think, over 60%. This means that fewer people are using Postbank and they are earning less on fees. So I want to know if there's anything they are doing to win back the trust, because I don't think there's trust. I think they need to look at it like that there's no trust of grant recipients and the public. There's just no trust as far as, you know, the people are concerned and the public is concerned. So how are they fixing the problems that have made the people to leave? Because losing about 500,000 recipients is a great deal. So what are they doing to ensure that now the public and the people that they've lost, they trust them again? And I look at the progress on the full banking license, and it remains behind schedule, the schedule that they have. My worry then is that this license is critical for the future of Postbank. I don't, you know, and I'm interested who authorized, you know, the moving of that for them to be behind schedule. And what assurance now do we now have that this delay won't jeopardize the bank, you know, in long term, like it won't jeopardize the long-term survival. And another thing, Chair, 4 out of 5 main financial targets were not met this quarter. And I think this is one thing that I always raise with the committee, that when people are not doing their job, when there's someone who's earning but not doing their job, what are the consequences? Because then now we're creating a culture of people who are not doing what they're supposed to do, but there are no consequences. It's terrible that you have 4 out of 5, financial targets that are not met and nothing is being done. We continue to compensate people who fail to service, the people. And maybe the last one, Chair, is that the Postbank, they painted the Postbank as totally different and an improved entity. I really don't see that in a sense, because the reports show these major financial weaknesses, the loss of customers, the missed of targets. So for me, I don't see anything that is totally different and improved entity when the same report or themselves, they know that they've got like a major financial weakness and they continue to lose customers and miss targets. So which one is the true picture? Are they the totally different and improved entity, or they really are in a crisis because they continue to miss targets and lose customers? So I just want to know, can we really say that the bank is truly stable? Thank you very much, Chair.
Thank you, Honorable Felicia. I see there's no other hands up, so maybe let me share my reflections as well. Maybe let me begin to appreciate the optimism of the bank and the modest results that we've seen before us against these circumstances. I think context is important to understand. I think the fact that it has managed to stay below the projected loss is something that we must commend. And the fact that it has been given a variation support. At one stage, we were even wondering what was going to be the outcome. So that variation notice 4 is a lifeline. So maybe that's where I think this committee needs to be taken into confidence. Maybe not necessarily here, but then I would suggest at another meeting. We noted in variation notice 3, there was a plan of action to do this conversions. And I think you probably have about 500,000 cards still to convert, and you have a period of time. What we don't want to see as a committee is that everything being left for the last minute. So maybe you can reflect on it, but more importantly, come back to this committee with a plan of action. Like, how do you intend to meet this requirement of migrating and converting the 500,000 or the remaining cards, which I estimate to be about 500,000, not by the due date, but I would suggest hold ourselves accountable to at least 3 months before the cutoff date, I think, of November. So I think for me, that is important, meeting that migration, and we need to have a plan of action or have sight of a plan of action. Honorable Badlani has highlighted the absolute misery that we went through surrounding the Master Service Agreement, and the uncertainty it created. Maybe I also want to echo the sentiment. Is that something that we as a committee need to be concerned with? Is that a noose around the neck of Postbank? Has peace been made with SASSA surrounding that? I know the last time there was the president intervened. Maybe please can we be updated in terms of where is that matter sitting? Then let me maybe just reflect on the issue surrounding what is perceived as a positive growth and the positive income statement. But we note that the operating expenses of 316 million reported was 41% below budget, which on the surface appears commendable. However, as a committee, I believe we must understand whether this understanding reflects genuine operational efficiency, or was it maybe a failure to execute planned programs that would advance the institution's mandate, the fact that maybe IT was 51% below budget, and marketing expenditure, for example, was 67% below budget. This, for me, raises certain red flags. So why would that have been the case that we did not spend that? I think there was another line item there of external parties. I noted that it was substantially below budget. Maybe specifically on the matter of marketing, what explains the significant underspend? Because 67% underspend on marketing would be something that one would be concerned. I am concerned, admittedly, about the cost to income ratio of 73% compared to the industry benchmark of 56.96%. This means that for every R1 generated, Postbank has to spend 73 cents compared to what the industry spends at 47 cents. Now, this level of inefficiency is admittedly unsustainable and undermines the purpose of our state-owned bank serving them. So maybe what measurable interventions, whether through cost rationalization or revenue enhancement, will you implement to bring this ratio closer to where it ought to be? The question surrounding the drop in non-interest revenue has been labeled by my colleagues. Management's explanations, I mean, from 68% year-on-year, plummeting from 108 million to 35. The explanation we've seen is that customer-based reduction and variation notice limitations. Maybe the question is, what are the real underlying factors driving this correction? Maybe what decisive actions are you taking to reverse this alarming trend that threatens financial inclusion, that's the financial inclusion mandate of the institution? I also want to then also reflect on the interest, because the interest income is the lifeblood. The variances may be small in terms of percentages, but the fact that interest income is the lifeblood of the Postbank, it's critical that we manage this. So maybe how does management intend to expand your interest yielding assets when the entity remains constrained from acquiring new customers? Maybe my last question then would be, I think I'll pause over there, Chief. Let me just check if there's any further hands that came up. There are no further hands. Chairperson of, maybe my last question is, in our ultimate vision of achieving a state bank, what then is the department's support of the Postbank to hold your hands to achieve this vision of us having our own state bank? We'd like to be updated by the department. Let me then hand over to yourselves, Chairperson of the board, to you first, and then to your CE to read the responses, and then we can get the departmental response and the ministerial responses if it's possible.
Thanks, Chairperson, and thanks to the honourable members for the questions asked. So let me start, and then CE will take over. Maybe just one comment. You might also comment, but part of what gives us optimism, Chair, is not only because we've seen real progress over a period of time. If we look at, as you pointed out, where things has been and the actual practical progress achieved, all the other limitations in terms of capacity and resources notwithstanding, but we also fully understand the potential that this bank has if it can overcome a few hurdles. We think that this bank can be a boon to many, many households that are surviving in terms of very expensive capital at the moment to either make ends meet or to grow. We think this bank will be critical for micro and small business and therefore for employment and growth in the country. We also think this bank can modernize much of the government payment services across many sectors. So the potential of this bank is quite huge, and this is the thing that makes us wake up at night and say we want to do the work, but we do note the very real constraints that we have to overcome to arrive at that point in time. But this potentially is a big bank, and we say that also when we talk to potential investment in the bank, to say the return on this bank is huge. It's in multiples, it's not to the bank, it's what it can do for the country that we think this bank matters the most for. The second point I thought I would raise before handing over to CE is around the business rescue process, and I think Member Podlani makes a good point around the relationship with the post office. Of course, one can't discount that there is the trauma of losing 4 billion, and it does things to to relationships. But I think we're quite practical and reasonable about it. And what we say is that, of course, the post office as a potential channel. So from a channel strategy perspective, Chair, digital first is our starting point. And because digital first is our starting point, the IT investments that CE was talking about are quite fundamental, because they also create the ability to transact digitally with the Postbank. And it's something that we are going to rush to as soon as possible, because that makes life easy on all sorts of things. And I think a minister always makes the point that digital is has a far wider reach than most people assume. There's still a need to grow, but it has a far wider reach than most people assume. So a digital first bank, like other banks do, would do quite a bit to ease the access burdens that we have as a bank. But obviously the partnerships that we have with retailers, with other entities, and of course, to the extent that the post office itself reaches a point where it has the necessary controls that can help, depending on the services that we're dealing with, the post office is a prospective channel going forward. So these are issues that we're continuing to attend to, and I think we will continue to do that. But I think it also raises the issue that a lot of the capital raises, as Member Qilishe correctly says, the capital adequacy is a concern. But it's important to make the point that the bank's capital adequacy was not bad until we were hit by the business rescue outcome. So one has to also take that into account, that that's the main reason for the capital adequacy situation. And that is the reason why the bank does require some investment to get to where it needs to get. Then there's the question around the retention strategy for clients, and I think CE will say a bit more. But one of the things that makes us quite happy that in the third quarter we managed to make progress around the issue of cards, and now we're going to be allowed to do distribution of cards, is that one of the reasons we lose customers is the fact that we're unable to give cards to core clients, among others, although that's not where we're losing customers the most. But also the absence of cards that can be distributed also created a situation where we couldn't onboard new customers, new clients. Incidentally, when we're doing the card distribution things, members, we did have instances of people who left before because of the unreliability of service at the time, who were seriously considering coming back, but we couldn't admit them back because of the variation notice constraints that we were dealing with at the time. So it's an issue that we are tending to, and we're hoping that we can deal with. Maybe I should then say, let me hand over to CE Chair. I will come back only if there's certain gaps, and let's give it to her in the interest of time.
Thank you, Chair. I will ask the portfolio admin to just maybe flag the presentation, because I'm just going to reference a few slides as I answer. So maybe let me start back. I think Honorable Matafa was asking around the current staff. What are we doing to ensure that I think all in all, the question, we're moving with them, we're retaining them. Absolutely. We do a lot of bursaries that we give to our staff as we try to grow with them. We do training, we do exposure to some of them. I think that the one thing that we were always mindful, it is unfortunate that majority of our staff doesn't have banking experience because they come from the post office. So we're doing a lot to grow them and train them and expose them, and they really are taking on the challenge. So absolutely, there's a lot of focus, and I think you would have seen in our APP in terms of what we're doing with staff. We've just done now, last year, we did a lot of salary scale to ensure that we normalize everyone, that they're in the proper salary scales. We're looking at some incentives that people might have lost during the transition from SAPO. We're reinstating some of those for those who legally we are required to. You saw we're looking at some incentives, which is really a short-term incentive, almost like a 13th check, because one of the challenges in terms of attracting skill as well is the benefits that we do pay, because we want to attract skills. Unfortunately, for a bank, we have to attract skills from the private sector, because that's the only place where banking skills are. So most of our skills, I'll say 70% of the skill that we need does come from the private sector in banking. The other 30% you absolutely can get across. I mean, we have people who have worked at AG, who've worked, but also that's, I suppose, to an extent, financial services. But a lot that we're doing. I think Honorable Bodane asked 3 questions. The one was around, in fact, it's 4. I think let me just talk about the customer, maybe the explanation. So because of the variation notice, we cannot open new transactional accounts where we issue a card. We can open an account for a customer, but of course, as a customer, you would want to transact on your account using a card. Because unfortunately, and I think this will deal with some of the questions, as I think Honorable Delisha also asked, around whether the bank has improved. I think we always must remember that when we talk of Postbank, as much as we say stabilize the bank, truly, honestly, we are almost building a bank from scratch, because we had a bank that operated from a post office. I think that probably needs to lend a little bit more, and maybe we don't emphasize it a lot. What does that mean? It meant that we had a bank that did not necessarily operate on the correct infrastructure, IT infrastructure, compliant infrastructure for banking, because banking is regulated. And therefore, in fact, that's how the bank ended up with a variation notice. And then again, I think we also need to remember, how did the bank end up with a variation notice? Because it was the SAB, starting back from the SAPO days, saying, look, we've given you this license to issue cards, but when we look at you, you're not necessarily operating the way you should be operating. And as we separate as a Postbank from the post office, that's what we're building. So when there's a question of whether we have improved, truly speaking, Postbank should probably be, had it not been improving in the last 2 years, we'd probably be in a rescue situation, because we should not forget that Postbank lost 4.2 billion. It had 2 loss-making years previously of over 1 billion. And I'll come back to that, but maybe let me talk about the transactional. So we can open an account for a customer, but how do you transact if you don't have a card? So the question, if someone comes to us and say they want to open an account, we explain to them the options to go, look, you can open an account, but you won't be able to issue a card for you, depending what kind of account you want. But you might have to then transact differently with us. We do have a cardless solution, but customers don't like that. They like to have the piece of plastic. And remember, again, when we talk about capital investment in infrastructure, mostly of the infrastructure that we're talking about that we need to build is banking infrastructure, the one that most people take for granted. Postbank did not have it. We do not have an app. We don't have physical presence. As much as Postbank operated from the post offices, it was all manual. And I think we know the history of how those processes, let alone the fact that it risked the license of the bank. But I think we know some of the unfortunate incidents that happened, because processes in a bank are regulated and are strictly compliant. So we cannot necessarily just tomorrow move to a post office. In fact, one of the things we tried, even negotiating with the post office at the time when we wanted to distribute just cards, we could not distribute cards out of the post office because it is not compliant, because banking is regulated in that sense that you need to have certain infrastructure within even the physical infrastructure. But I think let's not forget that when we talk about infrastructure, it's mostly IT. We don't have an app. I mean, Postbank does not even have a proper website. We don't have, we've just built now, we've just finalized our first phase of building a proper call center. We do not have a call center. People called into a call center and someone had to write on the side on a paper. So you couldn't track a person's complaint and come back to it. You couldn't do proper recording of the call so that you can call back to it. People didn't have a choice when they called. So we just built a new call center. So when we speak of Postbank, always remember we are actually almost building a bank from scratch. The bank operated from a post office, but quite frankly, it was never properly designed or had infrastructure it did not build infrastructure for banking, which is why we have the variation notice as we stand. So I was dealing with Honorable Bodana on the fact of infrastructure, that to say it is not an easy question that we can just move back to the post office. Yes, the buildings could absolutely perhaps be looked at, but they need a lot of investment as well, the post office buildings. But I think the most important for us, even if you've got a building, you need the IT to man that building. And that's the capital that we always requesting so that we can continue to build on that IT infrastructure. And then there was a question around office space. Unfortunately, again, we were very unfortunate. We did go to tender. We thought we found a space only to find that it is not adequate. Because I don't get involved in the procurement, and I think the executives as well in terms of the procurement process, the outcome of it, what we eventually found was not adequate offices with it for staff in terms of safety, but also when you want to operate a bank, it was not necessary. So now we're going back to the market. Again, we are trying to be creative around this. We're speaking to other government entities to see if there's space that we can share where they currently exist. But yes, we are working hybrid currently, remotely, and to an extent using some of the offices in Pretoria where there is space. On the SASSA update, this one has been a difficulty. But I think the good news, though, that if you recall, the extension of the MSA was up to December. So the good news is that that has been further, well, let me not call it extended. Perhaps let me just go back. The MSA is still operational. Maybe let me start with that comfort. Bring that comfort that we're still operating. The MSA is still operational. Beneficiaries are still safe. They're still going to have access to their full grant. But what is happening to try and improve that relationship? So Postbank did request an interministerial committee, because that's what is provided for in the MSA when the two parties don't necessarily agree. And because we respect the government processes, we have requested an interministerial committee. It has started. We've had one official meeting of the interministerial committee. We're still waiting for more. I think the one thing, though, that Postbank did at some point, because we submitted the request for the interministerial IMC a while back, but because there was that was not moving, and at the time we had the threat of September as a deadline at the end of the MSA, we did go to court to ask the court to keep the status quo to remain, so that we can allow the IMC to deliberate and find a solution, and whatever that solution is. We did not go to court for the court to deliberate on the MSA, but we went to court to say we're asking for an interdict. And we were, I think when we had the meeting with the IMC, we were hoping the IMC also will insist on put some sort of inverted commas interdict to say the status quo must remain. The IMC did at least sign off an extension of 3 months at the time, but what superseded that was that by the way, once the IMC started, the Postbank did go to court to withdraw the submission. And the court said, well, when we look at this report, we believe that there is something to be heard. And therefore, the Court made a decision that
put out an order to say the status quo must remain. So that was a decision that was made by the ConCourt in December to say status quo must remain, and we actually want to hear your motivation for an interdict, and while we allow the IMC to deliberate on the matter. I think that's quite important because I think there's confusion that Postbank took the contract to court. No, we asked the court for an extension of the contract so that the IMC can hear the matter on time, because the deadline at the time was September and then it was December. So the threat of the MSA was always standing and not necessarily aligned with the timelines of the IMC. And in recognition, Postbank knew that this process of the IMC are not going to happen within a short time. And hence, even in the IMC, we did request more than 3 months, but I think even then we did not necessarily win. So the latest, we have now a ConCourt order that says status quo must remain, and the IMC is deliberating. We've had one meeting, we're waiting for more progress, and the ConCourt is waiting to hear our motivation for an interdict, because it rejected, by the way, the ConCourt rejected the submission we made in terms of withdrawing that. I think that's in summary. I know that Honorable Subrathi also asked that. And then you can go back, can you go a few slides? I'll tell you, admin, which slide. I just want to deal with the slide, the question of whether, can you say the next slide? Thank you. Thank you. The next one. Next one. Oh, go back. Sorry, go back. I think there's one slide. Go back a little bit. Go on. Yes, the slide. Thank you. I'm looking for the slide. So Ms. Delisha, Honorable Delisha said, can we say the bank has improved? Absolutely, 100%. The bank has drastically improved. And again, be mindful of the fact that we do not necessarily have a bank. We had some banking operations that were taking place within a post office, infrastructure, and distribution. We did not have a bank. What we're doing now is building that bank. What we've done is stabilize the bank. Before, Postbank, almost every month there used to be issues of grants being not paid. We have more than 2 years paid grants consistently without missing 1 month, which is a promise that we made in 2023 when we had the September glitch as we were building the infrastructure, and we have kept to that promise. Postbank had over almost 10 years acting executives. We now have a full exco, except we have only the CFO who has unfortunately resigned. We've filled in the role of the CRO in Q3. These things will come in Q3. We filled in the role of the CHRO. We have a full exco except the CFO. And Postbank did not have that for almost more than 9 years. In fact, they didn't have a permanent the CEO for 9 years. Postbank was under the variation notice and did not have some of the compliance. I've mentioned it so many times in terms of how many compliant things that we have now qualified for, which has saved our banking license, which is the card business. That license, it has saved us. It is the work that we put in with variation number 3 that saved that license. We mustn't forget that variation number 3 was very strictly saying that if you do not meet this, we are taking the license. The fact that Postbank still has a license, it means we've done, there's work done. Postbank lost 4.2 billion and was loss-making, I think in the last 2 years, 2023, 2024, we're loss-making. Last year, we ended the business on a positive note. Yes, we're struggling with income, absolutely. Yes, we're struggling in terms of some of the customers, because if you don't have the infrastructure for the customer to engage with you, then there's no motivation for the customer to stay with you. We have made provisions to have presence and working with retailers, but if you recall, Postbank did not have that presence. People still had to go to the post office, and we knew that the post office was closing without even sometimes giving notification. This is not to speak badly of the post office, but it's the position they found themselves in terms of the infrastructure, safety of funds in the post office, safety of infrastructure. We know that even improving on that infrastructure, just so that we can work with them on some of the things. It's a challenge, but we're working well actually now. I think the relationship is improving in terms of between us and the post office. Where they feel comfortable, the post office, that they can take the operations that we're asking, they do say yes. Where they don't feel comfortable, that they believe that their infrastructure will put both themselves and us at risk, then of course they say no. Which I think when they present, they will come to you and tell you how many submissions we have submitted to say, can we try this? Can we try this? Can we try this? And some of those, they've said, look, we literally don't think we'll do justice in doing this service for you. So, but we absolutely are going back and forth to the post office asking where we can collaborate, and we are continuing to work on that. Yes, therefore there is customer that we're losing, because if you don't have the ability to transact with the customer, because you make money, banks make money as you transact with the card. But that's how you make fee income. So if the variation notice has limited us in terms of opening those accounts, in issuing cards, it means, of course, income is under strain. And I think Honorable Subratis did say that, yes, the bank currently is standing. Our interest income is what is really holding the bank. And we really are doing great work there in terms of how we invest our money and getting the returns on that. And yes, Mr. Subrati, we are watching that. We are doing a lot of work in terms of how do we diversify, but of course, being a state-owned entity, there's limitations in terms of how you can invest, because there are rules, but we are trying to work and stretch those rules as much as possible so that we can back the income. We are noticing the reduction in interest rate, and we're trying to see how do we fight that, how do we manage that. So the entity has drastically improved. And again, we forget the entity for 3 years before last financial year was on a disclaimer audit for 3 consecutive years, did not have a board. Currently, the entity has a very, very good board, joined in April. They really have added value to the business already, I think, from day one. But it's the first time that we have a full board. I think there's 3 other positions that the ministry is working on to fill. But even this board is really stretching themselves, working really hard and really dedicating their time to close that gap of those vacancies. So we have a board for the first time. We are out of a disclaimer. For the last 2 years, we've improved on audit year on year. Or on the previous year, we came out of a disclaimer, we were qualified, and then we ended last year unqualified. That's an improvement. So yes, the answer is a categorical yes. The bank has improved. As much as we're building the bank, we are improving it, we stabilize the bank, we're consistent in terms of how we pay and service our customers. And that is quite important. The challenge is whether customers can do more with us, but if you don't have the IT infrastructure to do that, of course, that's going to limit you. And then there was also a question, I think the last question, and then I think Ms. Delisha, absolutely, you're right to say, can we trust the bank? I think that's a journey that we are on with the customers, because of course, before now, that because now we speak proudly that for more than 2 years we have not had any interruptions in terms of how we pay our particularly SASSA grant beneficiaries. But before that, it wasn't stable. So we are building that trust, and I think the chair mentioned it, that we already have customers who are saying, please, can I come back? Which means that the word is getting out there, and there's trust. We are building that trust, but it takes time if that trust was diluted over time. I think, Mr. Subrati, of course, you talked about the financials in terms of efficiency. Is it? Yes, absolutely. I think one of the things that is keeping the business afloat is how our interest income and how we're managing expenses. But we are not managing expenses at the risk of what we need to build. We are really trying to balance that. So when you see, Mrs. Subrati, some cost in marketing, some cost in IT being under, yes, some of it is delayed, but some of it is really because of the procurement process that we didn't get the right response to what we said to the market, or just that process is taking longer. I think on the business case, one of the things we wanted to get through earlier this year was the core banking business case. But of course, because we have a new board, they asked relevant questions. In fact, they really did do a lot of work. So we had to take them through that as well. So that did cause a slight delay, but it was really because they really wanted to ensure that we're not wasting money, but we're buying the right things, and also setting up the IT committees of the board to take us through that. But some of them we're really on track. And again, I think we must not forget that when we did the last year's budget, it was on the basis that we would have been out of the variation notice. So some of the things, for instance, in marketing, we would have gone hard to market new business, come open our business. But of course, now we're limited because the variation number 4 came in. So that might impact some of the cost that you see not being spent, because we had a different view of what this financial would be, because it was under the notion that we will not be under variation notice anymore. I think that's it. On channels, improve service. One of the things that how are we going to do to improve customer to improve customers need to know where to engage with you. Postbank does not have channels. We need to build channels. That's why, again, we're asking for capital. We don't have channels. So where do you engage with us? We don't have necessarily an app where you can engage with us. Customers currently, Postbank customers, if they're looking for a statement, it is not the smoothest process. And therefore, we're very happy with the fact that the board now has approved our infrastructure build, because we are focusing into the next year. When you hear our strategy, you're going to hear we're focusing on those customer engagement capabilities as first and foremost, and then of course on the employee as well, in terms of automation, to ensure that there's no wastage. I think I've covered everything I could cover, Chair. Thank you so much. Thank you, Admin. You can take off the slide. Thank you.
Thank you. Thank you so much, CEO, and thank you, Chairperson of the board. Let me then allow the Minister to respond and the department to respond. Minister, if there's any responses from yourself, particularly around my concern and question around the support that the department is giving to Postbank to pursuit of its ultimate licensing as a state bank.
Thanks very much, Chair. And just to start off, I think it's going to be appropriate just to echo what the CEO said with regards to the initiative of the Interministerial Committee that was set up by the President and is being headed by the Minister of Monitoring and Evaluation, Minister Ramhopa. Indeed, it has had one engagement so far, and the resolution around there was to ensure that we take all reasonable steps between the entities and the government departments to resolve the issues of contestation within government processes. Of course, as you have heard from the CE, that she has mentioned that in December there were directions that the Constitutional Court had taken with regards to the case, which means that there are steps at that level that ought to be taken forward. But the appetite from the political leadership of this administration was to continue to use the IMC to delve through the issues of contestation and give it that space to resolve that. I think with regards to the second question on the support, I would invite the DDG, I think it's DDG Ngobeni, to come through to speak about those efforts to date and even going forward. And Chair, I think you would have noticed that also the Deputy Minister is around, so I think it will also be opportune to grant him an opportunity to make a contribution on this matter. Thank you very much.
Thank you, Minister. DDG, you respond, and thereafter we will get a reflection from DM Ngobeni.
Thank you very much, Chair, honorable members, Minister DM, and the colleagues. I'll just categorize the support that the department provide to the Postbank. Starting from a legislative support, the department finalized the Postman Amendment Act, which was very important to enable the Reserve Bank to license public entities in the banking sector. And subsequent to that, we look at the governance support. The department, the ministry, of course, then appointed the board for the Postbank. And it's currently also working on a process to appoint a board for the bank controlling company, which is required for Postbank to register so that it can facilitate the licensing period. That process is underway. The minister has appointed the selection panel, which is just working on when to convene, and then we can finalize the selection process. So those are the governance processes that we are providing, support that we are providing to Postbank. But even from an oversight perspective, whenever Postbank is indicated the need to approach the National Treasury for funding support, we've provided that support. And coming back to the issue of the banking license and also the variation notice, what we do as part of our oversight, we have got regular engagements with the Postbank. They have developed a detailed project plan, which the department oversee on a regular basis. We've got robust engagement, check where some of the activities are falling behind and what can be done to expedite some of the key activities, so that we're able to achieve these targets within the timeline that's provided. Thank you.
Thank you, DDG. DM Gungumbela, can I invite you for your reflections?
Thank you very much, Honorable Chair, Honorable Members, Minister, colleagues, and so on. I don't think there's much I can say because I think a lot that has been, the interactions that have been here cover a lot I could have actually spoken about. I don't want to repeat the issue that we're dealing with a Postbank, which to me has demonstrated that it has got committed team, which at all material times have been able to deal with the strategic issues, whether it's about stabilization, building, growing the bank, and differentiating it in all those phases. They seem to be on course in as far as those issues are concerned. And one thing that I think I've raised this, in a forum where the minister was chairing, that until all these other issues that are external to the bank are cleared, the reputation of the bank is always going to find itself having to fight for the best it can do. All those issues have been actually ventilated here, and even the bank has actually explained how it's dealing with those. The only issue I think I discussed with the DDG yesterday is the issue of scheduling with regard to give the bank a proper schedule so that it operates in a manner compliant with the convention of an institution of its nature. Other than that, I think the Postbank is being run okay in spite of all the difficulties, and I think they are able to demonstrate their weaknesses, and I'm not disappointed with the way they are dealing. And one of the most important things, by the way, is the fact that the relationship with the Reserve Bank has been hugely improved. Thank you.
No, thank you so much, DM, for summarizing for us. And colleagues, as we move off this item, let me then just quickly indicate that one of the lessons we learned through our oversight was the lack of government-to-government business. And I think if government can do business with government, I think a lot of our entities will be self-sustainable. That's the one lesson we took. And let me then conclude by saying, yes, we have, during our oversight and interactions with the Postbank, met a team that's very highly committed, always progressive, and despite difficult circumstances, are showing to us that they continue to make moderate progress and keep their head above water. We look forward, colleagues, to receiving your Q3 results, and I'm sure that would be a far more improved results than what we have here. So thank you so much to the team from the Postbank, Chairperson, NCE and your team. Thank you so much. And you can, we'll move off that item. You're welcome to stay on the platform, but we'll release you. Thank you so much. Colleagues, we move on to the next item on the agenda, and that will be to receive the presentation from the team of SABC. That will be led by its chairperson, Dr. Kato. Dr. Kato, I'll invite you for your opening remarks and to lead us into the presentation. The chairperson of SABC.
Yes, thank you very much, Honorable Chair, and good morning to the honorable members, Minister, Deputy Minister, and the acting DDG. I am joined in this engagement by the Group CEO of the SABC, as well as the acting Chief Financial Officer of the SABC, Mr. Matori. The CEO will lead us into the detailed presentation. I'll just briefly indicate, Chair and honorable members, that what you will see in the report of Q1 and Q2, it's a report that indicates that most of our KPIs are on target to be achieved for the financial year in question as approved. Where you will see a poor performance is in the areas of finances, which I think we have really traversed in many ways in the committee before. But you will also note that whilst we are missing the targets that we have set for ourselves for the financial year, comparatively speaking to the prior financial year, there is better performance, there is improvement. And I think the CEO will also speak a bit more on this, in that the context does matter, in that we deliberately avoided to budget for a net loss position. And therefore, in terms of our revenue target, we were quite aggressive, where the market was being projected to grow by between 3 and 5%. We were targeting double digits improvement of our own performances insofar as revenue is concerned, which is as high as 29%. So efforts are continuing to be made to try and outperform the market and reclaim and claw back on lost market share that has gone to other players in the space. But let me allow the CEO, Chair, to take you through the detailed presentation, and then we'll engage here in the end. Thank you very much.
CEO, the floor is yours. CEO, I can't hear you.
Can you hear me now, Chair?
Yes, I can hear you now.
Can you hear me now?
Yes, we can hear you now. I can hear you. Can you hear me?
Can you hear me now?
Yes, I can hear you.
You don't hear us. Even on my laptop. Can you hear me now?
Yes, I can hear you, see.
Okay. Apologies for that. I've now moved from the boardroom to my own laptop. And apologies if my screen is a bit blurred. So I'm going to be sharing on my side. Can I be given sharing rights?
Thank you, C. You got 30 minutes for your presentation.
Okay, thank you. Stop sharing on your side. I'm unable to share. If somebody can assist me with sharing rights.
You can go ahead.
Thank you. Please let me know when you see my screen so that I can put it at full screen.
We can see your screen.
Thank you very much. Thanks for your patience whilst I get online. Thank you for the opportunity for the SABC to present our performance for Q1 and Q2 for the financial year 2026. This report basically is going to be speaking to the delivery of our performance for what we are really calling a transition year, which is the second year of the 7th administration, but also, taking us, which is the second year of our 5-year strategy going into the third year. What I will do today, because I've got a very limited time, I'll focus on performance, our constraints, and what are we doing to address that. But also at some point, I'm going to hand over, Chair, Honorable, to the CFO to just take us through the financial performance. I think one of the most key things is that from an SABC footprint perspective, we still remain South Africa's biggest public interest media organization, which spans TV, radio, but I think most importantly, we have increased our presence when it comes to digital. And this is critical for us, especially in a period where we see public media being really under attack from a global perspective. And, I do like this slide because it really speaks to the value of public service media. And it really talks about public service media still playing a very central role, being the central bank of the information economy. And now more than ever, there is really an importance of public service media playing a massive role in fighting misinformation and disinformation and ensuring that we remain the trusted independent media that is critical in a democratic discourse. From our strategy on a slide that hasn't changed from one year to another, we still, looking at our 3-horizon approach. And interestingly, Chair, we are now going towards the end of Horizon 1. And it was all about really looking at our financial sustainability, stabilizing our operations and our finances. Horizon 2 was about building our digital and content solution, with 3 really becoming about transforming ourselves into a digitally fit public broadcaster. We've got those 7 strategic pillars that govern everything and every decision that we make, and then the 10 strategic priorities that really speak as core enablers of our, performance. Looking at this slide, really it talks about the journey of our strategy and corporate plan. Pre-2024, we come from an area at the financial year 2023 where we saw a loss of 746 million. But as we sit now, with the previous financial year, we sat at a loss of 253 million rand, which shows really, steady progress that has been made. And during this period, if you look at the financial year 26, which is where we are, we've really built the strength of our ExCo. We've got a clear strategy. We're seeing the digital audience growth. And, with Q3 coming in, you will see that we also hosted a successful G20 host broadcasting, but we'll speak to that when we come to the Q3 performance as we come back. Importantly, for SABC, it's important that when we look at our performance, we look at it beyond the metrics, beyond financial metrics, and we also look at our aspirations. And I think what's important, yes, financial sustainability is critical, and also looking at scaling of SABC Plus as a flagship platform, and I will talk to later in terms of performance to date. We also, importantly, strengthening our sales and commercial capability, because we do remain, very much supported by our commercial, activities. We want to maintain our unqualified audit and ideally move it to a clean audit. And again, also support the shareholder on the SABC bill and ensuring that there is an innovative funding model for the SABC. Looking at our achievements and our challenges for the period under review, what's important for us during this period is that really there's been a strengthening of our leadership bench, and you'll see in Q1 as we started the year, we sat with 50% of our leadership bench being in acting positions. We've seen the strength of our S1 performance, which is critical in terms of, because S1 prime time still really drives quite a large income for us from a monetization perspective. What's important as well, our commercial capability, and the CFO will talk through it. There's been a strengthening of that. And, what's important is that we're also seeing that we've been progressing in terms of going into the open financial markets to get some facilities for us to improve some of our infrastructure. And the CFO will just touch on it when he comes in terms of the progress we've done there. We still acknowledge the challenges that we've got in terms of our financial sustainability. We have not been able to really resolve the issue of retaining audiences because that's the job that needs to be done in coming up with, a DTH solution, and that's just the naming convention because, at the end of the day, the issue is about ensuring that we don't have audience loss and what does that solution look like, and also really fighting hard to improve our advertising and sponsorship share, but I'll speak to that later, and importantly, looking at that infrastructure funding, which is something that we're really focusing on. Chair, we've always spoken in terms of what we believe success looks like is really the achievement of the breakthrough programs. And what I have to say is that they are on track, though some carry a moderate to significant risk. And these breakthrough programs are translated into the strategic pillars as I go through the performance itself. And importantly, the risks that we have are known, are tracked, and importantly, we actively manage them. And what I'd like to also report on in terms of digital growth and really our performance overall is that we're seeing strong growth for SABC digitally. And that's critical because South Africa's population is youthful. They are digital natives. The median age, according to Stats SA, is 27.4 years old, meaning the majority of South Africans are below the age of 28. Therefore, as SABC, we need to ensure that we are available whenever, wherever they want us, on whatever device they prefer to use. And therefore, there's been a very focused effort of driving our presence from a digital perspective. So that's why we're seeing here that we've driven podcast downloads and they really increase and they're performing very well. SABC Plus is not just about bringing in registered users, but it's also about ensuring that the usage is coming in on a day-to-day basis. We've also been recognized as South Africa's and we competed against, obviously, global brands, but we've been recognized as South Africa's most loved media brand, most admired media brand, which is very important because it talks about relevance and trust in the SABC brand, and that's something that we take pride in. And really moving now into Q1 performance, taking into context that we are already sitting at the end of Q2 now, being in Q4, going through the last mile. Importantly on this slide is that we ended Q1 with 60% of our targets achieved, with year-to-date targets achieved, also sitting at 60%. I will talk at a high level, Chair, to this performance, but I think importantly, I'll go through in terms of the progress that then was made when we went into Q2. The context of SABC's financial sustainability pillar must be viewed against an ambitious target of 29% revenue growth against an industry projected growth of 3 to 5%. So the industry is saying the room to grow in advertising and sponsorship is actually 3 to 5%. But the reality is that for SABC to meet its demands in terms of running the organization and ensuring that it's sustainable and its dependency on the revenue stream of advertising and sponsorship means that it must grow at 29% revenue growth target. So going into it, it's important for me to give also the context that, in fact, as we sit here, we are outgrowing the market, and the CFO will speak more towards in terms of the fact that actually SABC is also outgrowing the economy, but I'll leave that to him to speak through the details thereof. So if we look at this in terms of financial sustainability, from a challenges perspective is that based on the budget for SABC, we're sitting at a loss of 200 million. That's in Q1. So we are underperforming from a budget perspective, with advertising and sponsorship being materially below budget. However, it's also important for me to state that what we are also seeing is TV license revenue improved during the quarter under review in terms of growth of 2% year on year, with the collections by our DCAs remaining the biggest input, having grown by 20%. And also importantly, that advertising and sponsorship revenue saw an increase from a year-on-year perspective. Going into the next slide, which is all about the content, our platforms and digital. Importantly there, we saw a strong performance of SABC One, which really is driven by our flagship content. SABC Plus reached a target of 1.19 million registered users, which is very important, which speaks to us driving the role that SABC Plus is playing in ensuring that we are relevant in a multi-platform world. Our monetization roadmap has lacked in terms of monetization of SABC Plus because we are also faced with some capacity and funding constraints. Although, in fact, what we've done to be more innovative, we've brought in external sales partners to assist us in monetizing our digital platforms. On the opportunity side, S2 averaged a share of 3.3% against a target of 4.5%. So they came in much lower than target. And you'll see one of the key things in terms of deliverables for us from a strategic imperatives perspective is the strengthening of the S2 schedule. And it's something that we've been working on. And for the period that we are under, which is Q4, we've just launched the new S2 schedule. And Chair, I know that we've been talking about this for a couple of months now in terms of funding the fresh new content. We've managed to bootstrap that funding and we've been able to go to market to launch it. So despite the challenges that we faced when we started the financial year, there is progress that we've seen coming through from a content perspective. Then going into the people pillar, which is a very important one, we do recognize the high vacancy rate of 20%. However, it's important for us that we manage that within SABC's financial constraints in the Q1 period. And what we've done from a people perspective is that this forms part of our austerity measures. I have in previous occasions indicated that 80% of SABC's costs are fixed, and that's obviously your employee costs, which are quite high. You've got your signal and distribution costs, and then you've also got your content costs, and that's fixed costs. So it doesn't give us a lot of levers to play with when we are looking at cost savings. But despite this limitation, we've been able to a certain extent, utilize this in terms of driving our austerity measures and managing our costs. And the CFO will speak more towards that. But I think importantly, also looking at the slide, from moving forward to a governance side, is that we've really progressed when it comes to audit findings, with 98% of them being resolved from FY 2024. And that's critical for the SABC because one of the things that we pride ourselves with is the strengthened internal controls as we move towards improvement in those audit outcomes. We sit, Chair, in a very complex regulatory environment that really continues to affect our cost and agility. We do have demands, for example, in terms of our conditions of license, in terms of just the content that we must deliver that requires to be financed, but has to be financed through, SABC bootstrapping itself. So that's some of the challenges that we continue to face from a regulatory perspective. But at the same time, we've played a very crucial role in inputting into policies such as the media and digital policy inquiries. And it's something that, we've also played a role in ICASA signal distribution regulations. But we take into cognizance that we still face, a number of challenges, especially in terms of fair access and affordable infrastructure, and that there is some slow progress with maintaining some of the partnerships endeavors that we've got. Q2 presents us with progress. And I'm very happy to say that from a Q2 perspective, we saw quite a lot of progress from the SABC. We moved from that 60% of targets achieved to 80%, which put us at year-to-date of 71%, which really is a healthy progress. And we saw that improvement going into the quarter that we've just finished. Then getting into Q2, the net losses were actually, we tried to stop the decline in in Q1, I spoke to 200 million rand. In Q2, we set at 156, again, obviously, against that industry projected growth. But I think what's important here, Chair, is that disciplined expenditure management, where we came in below budget from a year-to-year perspective. We saw an improvement from a revenue perspective of 5%, which was largely driven by an increase in sponsorships and TV licenses, with our sponsorship revenue increasing by 17% year on year, which is a massive growth from an industry perspective. And then TV licenses coming in at 4% year on year growth. And again, with the DCAs really giving us their largest share, the lion's share of that performance. Our technical solvency debt ratio sits at 0.77%. The CFO will speak more towards that. We're seeing it as healthy on our side, but taking into consideration that we're still commercially insolvent, and that solvency ratio is sitting at 0.35%. But Chair, I hope that this shows really the progress that is being done by SABC, looking at just the trajectory that we've been undergoing for the last, 2 cycles in terms of 2 financial years, but also from a quarter-to-quarter perspective. And even though the sponsorship revenue grew at 17%, Chair, but we are still sitting at 15% below budget, because our budget, assumptions are way higher than the industry ones. But nonetheless, we are able to see that growth coming through. Content and audiences, this is a very important thing for us. And what we're seeing is from an SABC News, which is all about really delivering on that public mandate. SABC News is dominant in the top 20 broadcasts. We're seeing strong performance in Indigenous language news. However, we did have that delay in launching the S2 channel refresh. But like I said, we've met in terms of the annual target for that. We have just launched the S2 channel refresh, and that's a very critical one going forward. And then going into people, which is very important for us, and looking again at the digital transformation. We exited Q2 having not finalized the resolution of the salary negotiations, but Q3 brought us a closure when it came to that. So since then, we have really progressed on that, and I can talk through it if time allows later on. And we also managed in this quarter to reduce our vacancy rate for executives from 46% to 23% with the appointment of a group executive for legal, governance and regulatory, and also our chief commercial officer to drive our commercial ambitions and ensuring that we do implement that sales operating model that we spoke to in our previous discussion. And I think also what's important in terms of the discussions we're having is that there is progress with the sales operating model with 50% of at Q2, that is, of the senior management teams having been placed, performance management agreements having been signed, and also those contracts having been signed. And then just moving quickly forward, again, Q2 is when we have, in fact, the AGM, and obviously out of the AGM, the unqualified audit opinion for the second consecutive year was announced, and it also presented with progress in terms of audit findings that have been resolved. But also during this time, it was really planning going into that G20 period. And I think most importantly, we still continue to navigate a very complex regulatory period. Going forward, before I hand over to the chair, is that looking ahead, what's important to us is really the funding of the SABC still plays a very important part in terms of just ensuring that we've got a sustainable funding model, but we're not resting on our laurels, because we've looked at other innovative ways to actually fund the SABC, ensure that we do address the issues of going concern. We actually were focusing on the SABC 2 channel refresh preparations, which we've actually executed. G20 was very critical from a planning perspective. And obviously at the end, we were also looking at broadcasting the African Cup of Nations, the Under-17 World Cup, and the World Cup qualifier broadcast, which I must say from a South African perspective, with the matches, we also were a supplier to FIFA for the World Cup qualifier, and that's how we actually use an innovative process as well to be able to fund the acquisition of the rights. And during this process, we also finalized the acquisition of the rights for the World Cup FIFA that will be taking place in June and July, where Bafana will be appearing for the first time in however many years. So that was very critical for us to be innovative and be able to do a commercial deal in order for us to fund, because we need to ensure that all the South Africans have access to watching their favorite teams play, especially from driving social cohesion and ensuring that there is universal access. Chair, I'm now going to hand over to our CFO to take us through the financial information. Thank you.
CFO?
Yeah, good morning. Good morning. Good morning, Chair and honorable members. Thank you for this opportunity to make the presentation. If I could get rights to share or ask my CEO to share. So we have made some considerable progress, Chair, from the last submission and the last time we were before this committee. We managed to obtain from our audit outcomes an unqualified audit, which is the second in a row. And if you recall from our last presentation, that had been the first time last year that we had gotten an unqualified audit in over a decade. We continue with our strong governance, and we have ambitions, and we are confident that we'll be able to get into a clean audit in the next financial periods. We have been dealing with challenges around our liquidity and funding, issues around our long-term funding model have not yet been resolved, and it is a matter that we have consistently brought before the committee. However, whilst that is ongoing, we have approached capital markets to try and alleviate and assist our infrastructure backlog. To date, we have successfully raised about 300 million, and in the market, we're just going through the final approval processes, and the last step that we are currently waiting on being the minister's approval and concurrency on the funding arrangement. And once that is received, we should be in a position to attend to the actual drawdown implementation of those facilities. It is by no means sufficient for what we require as an entity, but at least it provides a platform for sustained operations in the short term. And we need at least 1.4 billion to catch up in our immediate capex and infrastructure needs. On our Signal and Centec distribution matters with Centec, these have not yet reached final resolution. However, in the interim, we have received or achieved an agreed payment plan with the help and mediation of the department, where we are meeting monthly payments at a threshold that talks to affordability. But the long-term issues that have been raised around the pricing and fairness of still need to go through the mediation and processes that have been agreed to by the parties. As you are aware, our mandate remains unfunded as of now. We have
recording in progress.
The update from the ministry that they are nearing conclusion of a funding model. We are yet to engage and discuss on the final output of that. Our worry still remains that even after the proposals have been received, there is still a legislative process that would be required to give effect to the recommendation that will come out of process. And until such a time, there is need for immediate assistance in funding that mandate. And hence the plea still remains that once that process takes its legislative process, that short-term arrangements be considered to attend to the unfunded mandate. As the CEO has initially stated, we have made some improvements in our general working metrics. We have improved on our working capital and our cash holding, which reduces the operational risk that we carried from the last reporting cycle. We are still not where we need to be, and we'll continue to improve on that. And there are incentives that we are working on, or market structures that we need to attend to assist in shoring up our liquidity position, and that will also attend and help us reduce our creditors' days. But where we have not been able to meet our creditor payments, we have, through official arrangements with our suppliers, gone into extended payment terms to minimize and mitigate against the risk of us breaching contractual arrangements. Our infrastructure backlog still remains at around 4 billion. We have not yet made a significant dent into that. We had, through the allowed processes, through the MTF cycle and the budget adjustment program, applied and requested for funding. All of our requests have not been successful, and included in that request has been a request for the funding of the local elections that we, as the public broadcaster, would be expected, and are happy to carry that funding again, as that funding request was not successful. On our presentations for Q2 results, for Q2, there was a growth in total revenues of 5%. It is key to put that in context, Chair and honorable members, that there is contraction of the traditional advertising market, which is growing at negligible rates. As you also know, our economy at large, the GDP growth rate, have been subdued for a while. So whilst 5% does not meet with our budgeted targets, which we had set high because we are trying to bridge the gap of the unfunded mandate, it still represents a sizable and above market growth in a market that is both highly competitive and is contracting. Our TV licenses have grown year to date at the end of Q2 by 7%, 346 million. There's been increased and improved engagements with our license holders. We have spoken, we have implemented new collection platforms. We have launched WhatsApp chatbots. We have increased the channels with which we interact with our license holders, and through which they can also settle their license fees and make payments. And that has continued to spur the growth that we saw from last year. Our content investment still remains below budget, but we are making some strides in closing that gap. And as of the end of Q3, we had managed to put some sizable investment into the revamp of our S2 channel, which will then come through when we come for the Q3 reporting. Our total expenditures year to date have declined by 2%, And we continue to work on efficiencies within our cost structures. However, there is very little wiggle room in that, because we have been on this cost optimization and efficiency seeking process for at least 3 successive years now. Going forward for Q3 and Q4 priorities, the biggest enhancements or updates is we are looking at the new content slate that we have invested in, and are hopeful, based on current reception in the market, that the content that we have invested in will provide at least a base for sustained performance going forward. For TV licenses, I take it you would have taken the opportunity to read through. I'll just speak on the Q2 performance on our TV licenses, where collections continue to grow in Q2 by 8% above budget, and that is spearheaded and supported by our improved channels and engagement process with our license holders. The growth in DCA collections does, however, point to a worrying insight, because for an account to be collected through DCAs, it would have gone through our internal collection processes. And it means internally, or within the initial 60 days from renewal cycle, that TV license holder would not have paid for a current license. So the more the accounts get into DCs, it means our license holders are taking longer than normal to pay. And the worry is, the longer that they take to pay, over time, it erodes the effectiveness of the DCS. So it is not as sustainable, as we have said, and the chair and platforms before I said that whilst we doing the best that we can to make good on the TV license collection, it is not a mechanism that or a funding model that we think will be sustainable into the future. On the next slide, which is our revenue performance, there was a dip in Q1 around our licenses total revenues, and it is normally a trend that we find in our Q1 year end, especially as it affects most of our public sector clients, because it coincides with also the new fiscals and new changes in leadership that might delay some conclusion of media buying contracts. But if we then look at Q2, there was a rebound in performance, and year to date at the Q2, our losses have gone down and improved from prior period. Q2 in isolation was significantly better than what it was prior year, with losses almost halving, with a growth of about 46%. And we are forecasting that as the year progresses, that contraction or reduction of the losses is something that we will continue and hopefully achieve by the end of the Q4 for improved annual results. Our cash position has improved. Last year, we had ended the year at just over 58 million in cash holding. Currently, we have improved to a cash holding position of 262. Yes, part of that improvement is with the negotiated and agreed settlement terms with our suppliers. But importantly, what it does is it provides or minimizes the risk of our operations coming to a standstill. As long as our funding model remains unresolved, our cash position will still remain under stress. If you look at our key balance sheet ratios, which are an indicator of our financial health position, our current ratio still remains below target and benchmark, significantly so. Our return on assets for Q1 and Q2 was negative, impacting on the losses. But the key thing that if you look at the September 25 and September 24, the return on assets has literally improved from a negative 7% to a negative 3%, which talks to the contraction in losses, and we continue to work on that. Our debt ratio at less than 100% does indicate that we remain financially solvent, which is a good indicator, and we hope to build on that. All these indicators do point to the fact that as SABC, we remain at risk in terms of going concern in the long term and our ability to sustain ourselves without significant changes either in the funding model or relooking at how we structure and deliver our services. On governance, we at Q2 at 40%, which is above our target, and we are confident between now and the end of the year we will address 100% of the findings. And over the last 3 years, our achievement in addressing these matters has been close to 100%. On fruitless and wasteful expenditure, there is a reduction quarter to quarter, and there is also a reduction year on year. But what is most important to note, honorable members, is that the majority of our fruitless wasteful expenditure, which is about 97%, is on repeat fees that we pay to our artists when we repeat our content. So it is not an outcome of negligence or wasteful behavior. It is more of an accounting treatment that we are trying to engage the AG on, and hopefully we'll be able to resolve that. On our trend over the last 4 years, I think what might get lost in the discussion of our funding model that has not been addressed, our quarterly performance, especially in Q1, that was below budget, is just the outlook of where we have been and where we are and where we currently are going. If we look at 2023, our total revenues were at just 4.6 billion. We grew that as of last year to over 5.1 billion, and we expect and forecast to grow that even end of this financial year to 5.2 billion. That represents successive growth in 4 years, a growth of over 600 million and 25%, more than 25% over the base year. It talks to not only the change brought about by the new board and the new management, but it talks to the resilience and our ability to compete in a very competitive market, often dominated by private sector and multinational companies that are able to invest far more in the business than what we can do. And similarly, the trend in our losses, if you look at where we were in 23 at over 700 million, to a reduction of that to just around 250 million last year. And the forecast for this year, again, is that those two contract further. And we continue on that trend. But what we need to do and what we must do as an entity is to support the core of the business, but at the same time also invest in revenue diversification initiatives. And that's where the funding issue really comes in. If you look at our ask and our outlook first for the year, as we will need to manage our revenue levers and improve our diversification. Our play in digital and OTT is a long-term play, is not a silver bullet for our immediate issues. And hence, our ability to invest in that has a bigger impact on our sustainability in the long term, 5 to 10 years from now. On our revenue targets, we still aim for revenue diversification, again, for for us to be able to do that, it talks to the investments that we need to do ahead of the curve, and it's something that we consistently trying to juggle between sustaining current operations and investing for the future. It's a balance that we are trying to keep, but it's not an easy one. And hence the support that we require, both from the department and the committee, is to have funding adequacy and certainty around our funding model. And the last slide just to talk to specific asks that we have of the portfolio around our funding. And most importantly, in the short term, is the funding for local elections. As we said, we've made applications and that were not successful. But given where we are with our financial resources, we are unable to accommodate the coverage that is necessary across all the province and the languages and the infrastructure that is required without any form of support. And our recapitalization and infrastructure demand, which we previously made, is at least if that could get support. We have made some other short-term submissions through National Treasury, such as for the VAT exemption of our TV license, which we think can aid in alleviating the funding gap. And we leave this as an ask to the committee for support and for engagement in our stakeholders. Thank you, Chair, and with your indulgence, I hand over back to you.
Well, thank you so much, Chinda, and thank you to the chairperson and the team from SABC for your very, very detailed and comprehensive presentation. Colleagues, we have received the presentation, and I wish to invite you then to engage the presentation.
End of our presentation, we'd like to hand over back to the SABC board chair. Thank you.
Thank you, CEO. I think you couldn't hear the chair was already moving forward. So let me hand over to the chair. I think only one thing that maybe I can re-emphasize, the acting CFO towards the end highlighted the areas where we require some intervention from the committee. One of the critical ones that I just want to put out is the lack of funding allocation for the upcoming local government elections. So I think that's one area where we would really, really appreciate intervention, given the fact that that is a critical aspect of one of the key mandates that we must deliver, which is the support of the democratic processes of the country. Thank you, Chair. Let me hand back to you.
Thank you, Chairperson of the board. And maybe just to look at this, the screenshot that you had there of 120 million, maybe just a minute explain to us what is that? Is that what your ask is, or is that what your projected cost is? 120 million?
But thank you, Chair. Oh, yes, you may proceed, CEO.
Yeah, this is the ask. This is the funding ask. And there's a breakdown in terms of what exactly is funding in terms of the expense category. So this is basically the funding of the local government elections themselves and ensuring that we obviously deliver in terms of the public mandate. And I think the most important thing here, Chair, is that we all know that we currently are carrying the biggest, the heaviest burden in terms of the public mandate. And that our budget and the CFO has been very good in underlining in terms of the constraints which we're currently facing. So we are asking that, and historically, by the way, the elections have always been funded. So we are asking that for the 120 million so that the SABC is able to dispense with its duties of ensuring that South Africans are informed and educated leading up to the elections. And it's important for us to say that the activities of the elections don't start, let's say, in November 2026, but they start prior, because we have to start now in terms of just going through the information and education side of the deliverable. And this is what we've already submitted to Treasury via the DCDT in terms of the SABC ask to fund the delivery of the elections. Thank you, Chair.
Thank you, C, for that clarification. Colleagues, do we have the presentation? You now have the opportunity to engage the team from SABC on what we have received. I'll allow a few moments for colleagues to reflect, and then I will note your hands. Honorable Matafa?
Thank you very much, Chair. Chair, let me thank the presenters for the presentation. It is really welcomed. Chair, let me commend the corporation for achieving another unqualified audit opinion with marked improvements. And the 5% growth in total revenue is welcome, as well as the good solid standing as far as the solvency is concerned. Chair, I just want to ask maybe 2 or 3 questions. And the first one is on the license debt, the TV license debt. Does the corporation know how much of the debt is tied to government entities and government employees? And I think maybe it might be important, piggybacking on one discussion that we had, that maybe committee members must lead by example. We should also ask government to lead by example. And maybe since the minister is here, the committee can request the minister just to ensure that his colleagues in cabinet make sure that all their departments are up to date as far as any debt that is due to the SABC, should it be there. But I think the question in the main is if whether is the corporation aware what is tied to government entities, and if they are aware, what steps are they doing to ensure that they have these entities settle their debt? Chair, the second one is on the uncertainty around the SABC bill. I note the comments that were made by Mr. Ngoma as the meeting started about the interaction that we are going to have with the minister. So the question I have for the corporation is to find out how difficult is it for them to plan in the medium and long term with this uncertainty hanging over their head. And in that interaction that the committee is going to have with the minister, what message would they want us to carry? I'm sure the minister will hear, but will repeat that message from the SABC to the minister when we engage with him. So we are asking, because in the presentation, there was just an indication that they are strained because of this particular issue of lack of clarity as far as funding reforms are concerned. What would you ask us to say to the minister? And the last one, Chair, is maybe to reflect again on the input that was once made by the CEO in terms of market share, that the SABC, especially in some of the radio platforms, they do carry significant listenership, but the listenership or the market perception is that certain platforms are of lower LSM, so there is no appetite in advertising on those platforms. So my question is that after the SABC realized that perception exists, what steps have they done to try to improve on the market share as per those segments that will be able to attract revenue improvement from advertisement? Because I think that as much as we are trying to improve the audience share, it is important to know what they would want to be, what would they want to consume and through which platforms, and how are we tailor-making our campaigns towards them. So the question is, what steps are we putting in place to ensure that we understand the market that is there, and what are we doing to attract that market and be able to show the market that we are able to have investments on advertisement on the SABC platforms. But Chair, once again, let me thank the team for the presentation. We truly appreciate it. Thank you, Chair.
Thank you, Honorable Matafa. Honorable Delisha. .
Thank you very much, Chairperson. You see, Chair, I feel sorry for the SABC, and I say this because it is a public broadcaster in a very tough spot. It's trying to serve us as a nation while they are running out of money, Chair. But I think they're really doing a great job. They are doing better with their digital platform, growing to over 1.5 million. It was nice watching different influencers promoting SABC Plus during those. There's a soccer tournament that was happening, and they had a lot of, in the digital space, they had a lot of influencers that they were using to promote the app, that it's free, that this is where you can watch it. That was strategic, and I think they're doing a great job. I wish them all the best in growing that platform. And maybe also, Chair, let me congratulate them. I think they won an award for their news coverage. Their news coverage is very strong, and I hope they keep doing that. I know we are journeying towards the local government elections. I hope we won't have to fight, but I think that this growth in this platform demonstrate that they have a stable leadership team, or they're becoming one. But they are still losing money because their main income source is underperforming. They literally have no money, and the funding model, we all know that it is broken, which is something I hope we're going to fix on Friday, because we are having that meeting with the minister. I mean, it's terrible that to save money, they are not investing enough in new TV shows and critical equipment. I think I said it to the committee that I went to do oversight visit at Umhlobo Wenene and True FM, and yeah, and everything is not suggesting that this is a public, broadcaster. The equipment is outdated. There's nothing that I can say, it can compete with what the competitors of the public broadcaster is doing. So I think this will continue to hurt the SABC. It's going to hurt them now and in the future. But Chair, so my first question would have been to the minister to say, what is he doing with the funding model? But now I hope that he has developed a realistic, sustainable, and a new funding model that doesn't rely on the failing TV license collections and the shaky advertising, because we've seen how that is not helping, especially the TV license collection. Chair, we really, and I say this because it has happened, I think when we went to do oversight last week, this came up. We've got entities and government departments that are not paying their debt. We truly have a shameless government. It's very unserious. The government we have is very unserious, because how is it that you've got government departments that owe the SABC in unpaid TV licensing? How do you think that the people, the general public, is going to take that seriously if we've got this very same government that is not settling their debt? I really don't understand that. Why is it that government is not paying their own bills? So maybe the minister can share with us, what they're doing, what is being done to recover this money, because 37 million is a lot of money, which can make a difference in what the SABC is trying to achieve. Maybe another question is to maybe understand what the SABC is doing, because what they're doing is that they are spending less on new TV shows. I don't think that's strategic. I think that strategy is killing the SABC. I really don't think I really don't think that that is a way to compete, because their competitors, they have fresh and compelling local talent each and every time that they release. And you've got the SABC that is not investing in new content. That is the strategy that is going to kill them. I think they need to look at that in terms of like how do they cut cost without wanting to spend less on new TV shows and series, because I don't think that's very strategic. And maybe the last one, Chair, how does SAPC, again, I think we've got a very, very unserious government, and I've seen this across the departments and even the entities. How does the SAPC have 600 vacancies when the unemployment is at a crisis level? Because now I'm sure they have staff that is overworked, and maybe the board, I don't know, maybe the CEO, maybe the chair of the board, they can, I don't know, who can tell us, their plan to resolve this. We can't have people sitting at home without jobs, and we've got vacancies in both committees where I sit. There's vacancies. There's vacancies at GCIS. There's vacancies where they were supposed to employ young people, and those vacancies were still over 100. They're not filled. So we're supposed to expect or think that this government cares about this unemployment, unless they share the sentiments of Godebantashe when he said that government is not there to create jobs, and we see it. Maybe they're not lying when they say that, because they don't fill these vacancies, and we don't understand why. There's 600 vacancies and there's people sitting at home. Why do you have that? Why would you rather overwork the staff instead of employing people? Thank you very much, Chairperson.
Thank you, Honorable Delisha. Honorable Bodlani.
Sure. I don't know. It takes a minute for me to unmute myself and to switch on my camera. So I do beg your pardon. Chair, perhaps let me start by appreciating the leadership that is leading the SABC. I think they are the real reason why the SABC is still standing as we know it, same as the people at the Postbank and other entities. I think the odds are really stacked against these organizations, and I will limit myself to the SABC for the sake of the presentation. And again, allow me to make a political statement when I say the SABC, the legislation has set the SABC up for failure. You cannot give an organization a mandate and not fund it. Again, you cannot dismantle, for lack of a better word, the SABC with Centec and create a market, but not empower SABC, and equally not empower Centec. So now we are sitting with the SABC and Centec in a mediation process, because frankly, both one business owes another, and Centec is on his knees because SABC owes it. And that is, I'm not asking anybody to really provide a comment on that. It is just me making a political statement about how the historic mismanagement of this department is really, again, coming back to bite us. Chair, let me ask for clarity, please. We have seen the letter by the Minister to the Portfolio Committee saying on Friday he will take us into his confidence on where the process is with the SABC funding model, which obviously relates to the SABC bill. What we are hearing today from the CFO is that the SABC has gone to the market to try and ensure that the liquidity issues of the organization are addressed, which obviously tells us that the leadership is not sitting on its laurels, and we appreciate. But the question then becomes, if we are waiting to hear from the minister on the SABC funding model, and the SABC leadership is already going to the market to ensure that liquidity is sustained, are we not creating parallel processes? If I could just be addressed and please be clarified on that, I would really appreciate that. The CEO made the statement that the SABC is outgrowing the market and outgrowing the economy. If she could also simplify that for me, please. and to say what does that mean for the future of the SABC, and how is the SABC outgrowing the market, outgrowing the economy. I would really appreciate that. And I also want to join Honorable Felicia in congratulating the SABC. I saw the launch of the SABC S2, as it is now called, the channel refresh, as a success. I think perhaps just to say Parliament is an interested stakeholder in the success of the SABC. I don't think we were invited, but I'm sure there would have been colleagues that would have appreciated on a stakeholder level to be part of that and represent our constituents. I obviously would not have been available, but I think just a consideration that Parliament is a stakeholder, and where possible, we would love to support the activities that really says we are supporting the SABC. So as a consideration. And again, to congratulate this leadership chairperson on the sustained governance progress in sustaining the AG findings, and to say we see you, we see the work that you are doing, and it is not going unnoticed. And indeed, we do appreciate the unqualified audits too in audit progressive in the past decades. So that is also acknowledged, Chairperson. Chair, I had a question about the local government elections and how the readiness of the SABC. And I am hoping we will also have a presentation, a separate presentation, as we go on closer to the elections on the readiness of the SABC, especially noting the amount that has been presented to us this morning in terms of what the SABC needs to really carry a successful broadcast of the local government elections. So perhaps we should just pencil that in, Chairperson. If they could just please remind me on the mediation process with Centec, how is that going? And I don't think I really sitting here remember who is doing the mediation. And the sense that I got from the presentation is different from the last engagement where we had with Centec, where there seems to have been a willingness to really find each other in terms of finding ways to address the Centec SABC debt. But today it is a different story, which I appreciate. Just an update on the mediation process, please. And let me stop there, Chairperson, and really thank you for your attention.
Thank you, Honorable Bodlani. Honorable Singh.
Thank you, Chair. Greetings to the Minister, the Deputy Minister, colleagues again, and officials. Chair, I'm not going to repeat the points that I have already been covered on. Safe to say that I would also like to just commend the leadership and the department for the progress that the SABC has made thus far, because it is unfortunately true that over the last many years, we did not see the kind of leadership that we needed. And it's now brought not just the SABC, but a lot of our state-owned entities to its knees. So I think when we make comments, it must be in a context from where these entities are coming. And progress is noted and is appreciated. I would also like to pass my congratulations on the awards that the SABC achieved. The two concerns that I just want to raise is that the one has been echoed, but it is a serious concern that the SABC doesn't have the funding to cover the upcoming local government elections, because I think that is critical. So something would have to be done about it, I hope, and soon. And I really also hope that the SABC would give us independent, unbiased coverage and coverage for all involved during that process as well, because that's been one of the contestations about whether the information that is being imparted is true, is impartial and fair, because that's what we need. And the second thing that I would just like to raise is that I understand all the constraints, but it is concerning to me when we find that the SABC is having revenue challenges and improving and enhancing the income to the institution, that it says, for example, in Q2, the marketing costs reduced by 65% compared to the previous year because fewer than planned marketing events were held. Now, if we need that advertising revenue, which could be substantial revenue if we get it right, if we look at other channels, for example, that is substantial revenue. But we now do not use our marketing budget and we actually have fewer events planned. I think that's a missed opportunity to enhance revenue. Thank you, Chair.
Thank you, Honorable Bodlani. Thank you, colleagues, for your very pointed contributions. Let me just briefly add to your contributions before I hand to the team to respond. Colleagues, let me join my colleagues in appreciating what has appears as consistently been a very resilient team from the SABC. I know in last year during our oversight, we experienced this kind of resilience, this kind of amazing spirit, and it continues to come through. So well done to the team. I just want to pick up on maybe areas. So I'm not going to cover areas that haven't been covered. I just want to talk a little bit around the sports division, particularly around the World Cup where South Africa is now appearing in the World Cup. And maybe we could talk a little bit about that. And when I did get that news, I was really quite excited, more so for SABC, because I could see that means more revenue. But we noted in this financials that were presented that the sports division generated a net loss of 104 million for 6 months. Maybe the question then is, maybe not here, but what is the challenges that we are facing versus the breakdown regarding the sports rights cost versus the revenue generated? And what is the strategic plan to make sports business financially sustainable while still honoring our SABC's obligation to broadcast national sports public interest? South Africans have a right to access national sporting events on free-to-air television. How will this be balanced against the financial realities? And maybe related to that, has a conversation taken place with the Minister of Sport and the Department of Sports of how we can collaborate and how, being a state entity and a state broadcaster, SABC can be given some additional privileges and benefits? So maybe that was the one question. There's a line item called amortization of program, film, and sports rights. That item is 27% below budget. Now, while this may be presented as a cost saving, while this appears as a cost saving, maybe the question I will ask is, does this represent an underinvestment in content, which unfortunately will inevitably result in an audience erosion, diminished competitors against streaming platforms? So maybe let's get some clarity around that there. And maybe the question around Centec was asked, but my questions around that will be a lot more pointed. Is that what is the outstanding debt owing to Centec? What is SABC paying to Centec? What is the amount that is being paid? And is this threat of a black-on-air crisis still, has it been averted? And Honorable Bodlani did ask for an update around the mediation process over there. Colleagues, let me then hand back. I think the SABC bill, we will be receiving the presentation on Friday on the alternative funding model. So let me park it off there and hand over to you, Chairperson of the board, to lead us in your responses.
Thank you very much, Honorable Chair. So I will take some questions and then I will hand over to the CEO and the CFO to speak to some of the issues there. I think Honorable Matafo, we obviously appreciate the appreciation of the work that is being done there. And also, I think the CFO will speak to the exact amount of the debt that is owed at the level of government departments. And on the question of uncertainty around the finalization of the bill, we have always highlighted that the funding of the public service mandate sits at the center of the resolution of the financial sustainability question for the SABC. So the sooner that question gets answered, the better we're able to plan ahead, but most importantly, to give confidence to our critical stakeholders, specifically the marketers and sales agencies and marketing agencies, as it were, because without that final resolution on the long-term funding model, sustainable funding model for the SABC, the market is always unsure if the risk of blackout is fully addressed or if it can materialize. So until we can provide that certainty, we will always have difficult conversations with the various stakeholders. This includes even the stakeholders from the capital markets. They too will be unsure or continue to be unsure whether they can make long-term commitments, funding commitments to the SABC when the long-term viability of the SABC is not currently secured. So it's critical that we are able to resolve that funding question, because it also lends itself up on the question that other members have raised around the SABC's ability to put compelling content on air. If that funding challenge is resolved, then also the strategy for content acquisition becomes a lot more stable. We can plan for it long term, and we can finance it or invest from that perspective. So the resolution of that funding question is indeed a critical aspect that speaks to the long-term planning for the SABC. And I think then the other issue around the perceptions of segments of audiences and listenership that we have in terms of perceptions about their ability to have buying power, and therefore the translation into investments and so forth. There is a lot of work which I think the CEO will expand on this in terms of us investing and spending time on the data analysis aspect of things, so that we're able to drill into what sort of viewer or listener is viewing or watching a specific show, or is listening to a particular radio program, and therefore out of those insights we're able to then put together value propositions for our stakeholders and be able to demonstrate to them that this is the type of listener who's listening here, and you can get value by advertising here because this person is able to afford your product, or even indicate that this market is able or is currently using your product and so forth. So that market intelligence is something that we are working on, which the CEO will probably will also speak to it a little bit. I think on the issues raised by Honorable Delisha, the issues around the funding model, I think I've spoken to it, and the spending, the less spending on new shows. Of course, as I briefly touched just now, for us to be able to invest in compelling content, we do need that financial capacity to do so. But what I can say is that, as Honorable Bojane referenced, the relaunch of S2 is anchored on the introduction of new shows, compelling shows, which we believe should be able to allow us to drive S2 towards profitability and assist us in audience retention, but also attraction of those audiences that we had lost before, and try to drive some revenue generation strategy there. And I'll leave the question on vacancies and the strategies that are being implemented there to the CEO to speak to it. Honorable Bajani, the issues around the raising of capital in the market. Obviously, we see the funding model addressing more the long-term solution, but in the meantime, we do have to address the challenges that we're faced with. I think Honorable Felicia also correctly indicates that the challenges of infrastructure refurbishment that we have across our business units is so dire that the intervention is required now. We can't afford to wait, because the longer we wait, that risk of blackout and other things then is likely to materialize. That is why there are those interventions. But if you look at the scale of the progress that we're making in that regard, it's not so significant to the extent that if those transactions were to materialize or get finalized prior to the finalization model, if the funding model will not include, amongst others, as one of its components, capital raising in the market, it shouldn't really throw us off. At the moment, we're looking at just over 200 million. That is in the immediate realizable, but you would have seen in the presentation that the CFO has made that the pipeline that we're engaging on is only about 1.4 billion. So whereas our backlog is somewhere in the region of 5 billion insofar as capital infrastructure investment is concerned. So in that context, we are not worried, but the reality of it is that if we do nothing now and we only wait for the funding model to be the solution, we might be moving even more closer to that risk of some of our stations not being able to go on air because of old infrastructure as it were. I think the CEO will probably explain a little bit here on the issue of SABC outgrowing the market. But if I can just indicate, as you would have seen, that the expected in terms of advertising and sponsorship, the range was within the 3% to 5%. So the SABC is outperforming that projection, but also then the economic growth in the country is so low that it's in the 1% region. So if the SABC are performing at a 5%, that means we are growing a little bit at a higher rate than the level that the economy is performing. But the CEO can also add there in that regard. And I think we take note of the stakeholder issues insofar as certain critical milestones in the life of the corporation that we should extend the invitation to yourselves as a critical stakeholder. We take note of that, and we will attend to it as we go forward. We are able and we would be ready to do a separate presentation to the committee on the state of readiness for the election coverage. Of course, I must also restate here, Honorable Bojani, that funding shortfall that we spoke about of 120 million becomes critical, because our state of readiness will largely also depend on the finances that will enable us to be able to deliver along the lines of the expectations that society and South Africans will be expecting from us. I think because the mediation process is led by the minister and the department, I'll park that question and maybe the minister will speak to it. But if we're asked to speak to it, we can speak to it from a perspective of our participation to it. Then I think then Honorable Singh, we can indeed give assurances that our approach and commitment to South Africans is to provide an election coverage and generally provision of news and current affairs in a manner that is independent, impartial, unbiased, and fair to all the parties involved. That is our commitment, and that is what we stand by as we once again move towards the critical democratic project of the local government elections 2026. And I think the CEO will speak a little bit around the underspending on the marketing there. And I think, Honorable Chair, the sports division question, the CEO is able to put this in an eloquent manner. I'll leave it to her. But suffice to say that also the element of a sports program being short in terms of the time available for a game and how much advertising you can put there, we end up spreading some of the revenue that comes for sports into other platforms so that we're able to fully meet the obligations towards the advertisers. But the CEO will speak a little bit more and expand on how the rights issues work, our ability to monetize them, and the challenges that we're facing there in that particular space. Conversations with the Minister of Finance, indeed there's been conversations, but I think the one point to just highlight at a very global level is that the sports ministry itself, unfortunately, you should look at the equitable share that they get from the fiscus. It's quite limited, which also limit their ability to invest on interventions that can help us as the SABC in delivering sports of national interest as it were. But I think the CEO can also speak a little bit more there. And the CFO will speak to the amortization question and maybe also just confirm the debt owed to Centec, but it's somewhere in the region of 1.5 billion now as we speak. And maybe CFO just speak also to the interim arrangement that we came to under the guidance and leadership of the minister, where we improved the payment from 20 million to 30 million and the futuristic outlook there. So I think, Chair, from my side, let me leave it here and hand over to the CEO and the CFO to just maybe clean up on those areas that I've skipped for them to attend to. Thank you, Chair.
Thank you, Chair. I'm going to hand over to the CFO to take us through the questions pertaining financials.
Thank you. Honorable members, I will deal mainly with the issue around amortization and also how that interfaces with the reduction in marketing cost.
CFO, may I request that you switch on your camera when you speak? It's possible, please.
Apologies, Chair.
Thank you.
So I'll speak to the issue on amortization and how that interfaces with our investment or spend in marketing. So amortization costs, we will expense them in an income statement only when the programs have been aired and broadcasted. What we had been doing in Q2 and Q1 is to invest in the content, in the new content that we are only launching now in Q3 and Q4, primarily on S2. And hence we had not expensed, and you don't see the expense coming in our income statement, but we were spending and investing in the content, and the production process was progressing ahead of schedule to the point where, as we sit now, we are sitting with a healthy inventory of produced episodes that are ready to go on air. And we had also made a conscious and deliberate decision to say, because we were going into AFCON, we thought it would not be strategic to launch new content on air at the same time that there's a major sporting event going on, as that would split our viewership. So that should come through in the next quarter in our income statement. And consequently as well, is because we were launching our content later than planned, we then deferred our expenditure on marketing to be able to then support this new content and the roll-on and the refresh that we're bringing to our schedules, and hence, again, the deferred expenditure in marketing. But it will, there will be an uptick in the expenditure and investments in both those lines in Q3 and Q4. Thank you, Chair. I'll hand over to my CEO.
Thank you. Thanks, Tendai. And just going back to talk through the vacancies, I think it's important to note, I can see I'm not showing on the screen.
Yeah.
Okay. Yeah. I think just from a vacancy perspective, just to say we are in is that we are implementing at the moment the workforce planning, where we are looking at the right skills for the right job at SABC. So unfortunately, we can't just go to market and just fill up the headcount, because it's also important to recognize that it's a historic headcount. If you look at the presentation that we've just done about the growth of digital platforms, etc., it means that we need a new skill set for SABC. We need data scientists, etc. So that's what we're looking at in ensuring that we do bring in the correct skill set. But at the same time, due to our liquidity challenges, I did indicate that one of our biggest costs at SABC is actually our employment costs. Every month, we pay more than 200 million rand, for example, in terms of a salary bill. And one of the key things we've done is put a soft moratorium to ensure that from a recruitment perspective, it's more deliberate and it's well considered, and we ensure that we bring in the right skill set. And the second one is that every year at SABC, we actually take in a new cohort of interns. If you look at this year under review, we had 70 interns that joined SABC. And the good news is that we tend to retain our interns so they get permanent employment with the SABC. So there's that strategy as well that we are utilizing to do that. And then going back in to talk about sports, and thank you to Tendai, I think he's spoken well about amortization. And Chair, you'll see when we come through with Q3, you'll start seeing also the amortization costs for sports coming in higher, simply because of the big tournaments that would have taken place during the Q3 period. But I think what's important is just to say that sports, it's something that we are committed to ensuring South Africans are able to view sports, that they participate, that it's not only for those who can afford to pay subscription fees. But the reality is that acquiring sports is an expensive exercise. We do compete commercially to acquire those rights. So it isn't like perhaps there's a free-to-air package for most of the sports that's much cheaper, that's more affordable. We still have to compete for those rights, particularly because the rights owners broadcast, it's a massive revenue income for them, and that's how they keep those sports sustainable and they deliver the quality of that sport. So currently, when you see the African Cup of Nations on TV, for example, it's because we've gone out commercially and acquired the rights. And with some of the rights holders, we have stronger relationships than others, where with some, for example, AFCON being a very good one, where there's a key understanding that South Africans have to view Bafana Bafana, and that, it is one of those tournaments that has to be on free-to-air. So you find that the negotiations are far more progressive in terms of discussions, but taking into consideration that quite a lot of the others, it's international rights, and we are competing with international players to acquire those rights. So that's where we are with sport. And then going to the issue of audiences that Honorable Matafa raised in terms of market share, SABC does have a very large market share from an audience perspective. However, it doesn't translate into a revenue side of it. And yes, there was the issue that's been raised. The reality is that SABC continues to be viewed as providing content to mass audiences. And there is a historic narrative that obviously mass audiences don't deliver the prerequisite return on investment from a marketing rand perspective. But the reality is that to change the perception, there must be a lot of education. And it's something that we do at SABC, where we've got our own bespoke insights that we take to the market from a trade marketing perspective, where we really give them knowledge regarding you know, for example, the day in the life of a Metro FM listener. Who is the listener? In fact, they have far more disposable income than people give them credit for. And what is it that SABC brings to the table in order to solve for a brand? So that's something that is continuous. You know, we have immersions, and we really look at ensuring that our business propositions, our value propositions that we take to market, give that value and an understanding of really what this mass audience is about, and the fact that it is a market that you can't, you know, afford to ignore in the medium and long term. So that is a continuous process that we undergo. Last year, we even had an event where we looked at language, for example, and the fact that by virtue of our reach from a language perspective in radio, we are unparalleled, and what is it that we could offer from a partnership perspective to, you know, advertisers. So that is something that we really look at, and that is ongoing. And then from the question about TV license debt, Honorable, in terms of outstanding government debt, year to date, I think we are still sitting at give or take 45 million rand from national government debt. We don't have data per se on outstanding TV licenses from government employees. So we are undergoing a massive process of data cleansing, because quite a lot of the data that we've got is very much historic data. We're busy with the data cleansing process and partnering with other partners such as banks, etc., to ensure that there's data enrichment, and we are then able to use that data to go to market and be able to, you know, recover TV license fees. So that's a very important one that we are in the process of implementing. I think Tendai has spoken regarding the other side of the finances. But then going back to talk about the statement, Honorable Bodlani, in terms of growth. You know, if we look at real economic growth in South Africa, it's projected at between 1.5 to 2% growth from an annual perspective. The fact that SABC, in a sunset traditional industry of advertising and sponsorship, is growing at 5%, it means it's growing above, you know, that economic, but also growing above the market rate, because the market rate for that same advertising and sponsorship, which I'm referring to as traditional industry, is actually forecast to grow at 3.325%. But we're growing at 5% and slightly above, meaning we're really punching above our weight. And despite the challenges that we face, we are, retaining that growth. However, it does not take into consideration the fact that advertising investment have moved to digital platforms, which really are owned currently by international platforms, and that's where the revenue is going. And that growth is far above that 5% growth. And hence the importance of us strengthening our presence on digital platforms, growing SABC Plus as an OTT streaming platform of choice, and then coming up with that monetization of those platforms. So that strategic pillar in terms of our digital platforms and growing audiences in a multi-platform world is very important, to allow us as well to dip into that growth from a digital perspective and not rely on a traditional industry that we are currently relying on, which is traditional TV, traditional radio, and obviously sponsorship being part of that traditional revenue structure. I hope I have answered the outstanding questions. Back to you, Chair.
Thank you. Thank you so much, CEO of SABC, and to your CFO as well as the chairperson. Let me now invite the Minister for his responses, maybe fill any gaps, and Minister, any pointed questions that was directed towards you to respond to them.
Thanks very much, Chair. And perhaps to start off where the GCO ended. Sometime in November 2024, and this was after the SABC leadership made an approach to my office requiring support with regards to government departments in particular who were not paying up their TV license account. We embarked on a process where we literally wrote to all of them, including even the amounts that they were owing. We engage with the leader of government business at the national level, just in terms of the awareness and the whipping that we needed to do amongst national government departments and entities to honor their commitment. I don't think my recollection of that exercise was it did have an impact, but it was just minuscule amount, and the CE might be in a position to better confirm what was collected or the uptake that emerged as a result of that process. But it does require far much more enforceable interventions. There's limited scope in what we can do other than the continuous the continuous attempt to reach out to our colleagues in government about this, but we are providing that support to the entity in that regard. I think the chair also raised an important element with regard to government employees, because even though the stats aren't there, there is an indication that there is a fairly sizable amount of government employees, just like many parts of society, who do not honor their contractual their obligations towards the TV licenses. We had done an exploratory exercise in the Department of Communications and Digital Technologies to see which instruments we can invoke, particularly starting with employees within our own department and portfolio. And in that, we ran into some problems, particularly with regards to, we were looking at what would be perhaps the most instant and progressive way of getting government employees either having their outstanding accounts potentially deducted from their salaries, or looking at what would be the mechanism. We ran into a cul-de-sac on the enforceability of that aspect. But I think, coming back to the issue of funding, the chair and the CE, in response to the questions highlighted, and I think even the Chief Financial Officer made the point about urgent needs around funding and the long-term solutions. And the funding model is part, obviously, of the long-term solution, linked also to the finalization of the bill. And I take note that, Chair, through your guidance, and even Honorable Matafa's prelude to his question, was that the engagement that we are having on Friday will get into that. But there are immediate pressures that confronts the SABC. Chief amongst those being the reality of the special project of the elections broadcast. And I think it's something that even the checkholder is aware of that. So the conversations that we are having, which continue to be ongoing with Treasury, they are mindful of that. And even in previous dispensations, in years of elections, there's always been, additional allocation for purposes of elections. So I'm hopeful that with that, for the elections, there'll be a resource there. Chair, one of the honorable members, I think it may have been Honorable Bodlani, asked about the status with regards to the mediation efforts. The update in there is that I think in the last engagement we had, we did indicate that the mediator had been appointed and has been in discussions, interactions with both the SABC and Centec, particularly on gathering information and an exchange of information from both parties in order to get the actual work done. It hasn't been resolved. But that exercise is continuing and taking place. And Chair, I think there was a pointed question with regards to what is the current quantum of the outstanding debt to Centec. So if the CE and the CFO can come back on that question to deal with it. But what I will mention, though, is that given the challenges that the SABC had and experienced, particularly with meeting up the 60 million monthly payment which they had been doing, from the department side, what we had been able to do through savings within the portfolio is to be able to find an amount to the tune of 60 million spread across 3 months that would top up what the SABC is able to afford towards the signal distribution amount to take us to the end of the financial year, and based on whatever allocations happen with the financial for the financial year ahead, we'll then be in a better position to see if we are getting more money. That could potentially also mean even an increased allocation towards that. But it was a short-term relief on the basis of available savings within the portfolio, but more importantly, recognizing the need that where possible, we should do everything within our powers to avoid the instance that you highlighted earlier with regards to an impact on broadcasting. Thanks very much, Chair.
You are muted, Chair.
Thank you, Honorable Bodlani. Colleagues, I wanted to make a suggestion, considering the fact that we are in the LGE and CEO has indicated that the work starts now in terms of the preparation.
Is it my connectivity or the chair?
Can someone respond? Am I audible to others?
We can hear you, Chair.
Thank you.
Yeah, we can hear you, but initially you were mute while you were speaking, Chair.
Okay, thank you. So colleagues, I want to make the suggestion that as a portfolio committee, our task is to lift certain critical observations and see how we can support the request. What we've observed here is that the 120 million that was requested, and my understanding then would be it would have been requested from National Treasury, was not approved. And please correct me if I'm wrong. And given the fact that this is a critical year of LGE and the fact that the starting time is now in terms of the planning, and they will be unable to support an unfunded budget. So I'm proposing that this portfolio committee then, perhaps I'm proposing, sends a letter to the Minister of Finance, highlighting this anomaly and observation that we have made in this, and maybe then appeal to him and suggest to him that he needs to revisit that there. Why I'm saying this, it's important that we lift this now because we are ahead of the minister's budget that he will be tabling. So this is my proposal that I'm putting forth, that we then send off this letter as a portfolio committee. Maybe let's have some input and reflections, and is there support from the committee to that suggestion? Yes, Honorable Bodlani.
Perhaps we should just get confirmation of your understanding first and take it from there, please.
No, my understanding is very simple. What we've heard as a portfolio committee, there's no finance has declined a request for 120 million that SABC has made. Now, if we have made this observation as a committee, to ignore it, I think would be remiss of us. So I am saying to support the entity, we then back it up by putting a request or an observation to the Minister of Finance that SABC, from our oversight, is in need of funding for covering the local government elections, which we have been informed it has not been approved. So I'm depositing it here as a suggestion. If the committee feels there is value in it, we can take it forth. Otherwise, we can park it off. Does that clarify it, Honorable Bodlani, or is it still not clear?
Sorry, Chair, just before, can I speak, Chair?
Sure, Honorable Giri.
No, just clarity. So we're saying if SAPC doesn't get the money that they're requesting, that would mean that they're not ready for the local government election.
That means there's no funding available. How then do they plan effectively if they don't have the allocation of funds? What we're saying, we ask for the monies, and I'd like to get that clarity from SABC. Who did you ask the money for? Where you refused the money? Because that for me is a material observation. We have a national broadcaster who is mandated to provide universal coverage. How can they provide universal coverage of LGE if they are not funded? Yes, Tendai, can I invite you, CFO?
Thank you, Chair, and honorable members. I indeed wanted to provide that clarity and confirmation that we did make an application through both the budget adjustment process and the MTF allocation process through the standard legislative process. And submissions were made to the department for onward submission to National Treasury. And the allocations through both, the request for allocation through both the processes were declined. So we did not get any funding for it. And you are indeed correct, Chair, to say that without funding, we have no capacity or resources to provide adequate coverage for the elections. Thank you.
Thank you. Thank you. See, you want to add to that? My question was, what is the impact on you being able to plan without clarity in terms of funding? How then are you expected to broadcast or cover the LGE to South Africans through a public broadcaster if there's no funding? What will the impact see?
So there is a real consequence in terms of the lack of funding, because it means that we would be limited in delivering the election coverage itself, but also the activities leading up to the coverage. So one of the key things we do is election education. We give, in terms of the requirements from a public mandate perspective, to give the platforms for the plurality of voices. In our engagements with the IEC, we're sitting at around 400 political parties that are contesting the LGE. And when the ICASA regulations are published, it will give the guideline in terms of, for example, how much, airtime we need to give to all the respective political parties, but not just political parties, but to South Africans themselves, so that they can be heard. So there will be real implications, because from a capacity building perspective, we just won't be able, the LGE by its nature requires wall-to-wall, for example, news coverage. We have to traverse the length and breadth of South Africa for us to be able to ensure that we don't leave anyone out of the democratic process. So it means that in terms of upgrading our broadcast infrastructure, ensuring that we bring in the additional human capital that's required for that for this period, we won't be able to honor it. Thank you, Chair.
And whilst I got you on the line, CE, what then is the allocation given to the IEC, and does SABC draw from that to assist you in your funding needs?
We do get an allocation. We're still finalizing, obviously, those agreements with the IEC. We do get an allocation, mostly that goes to election education. So that we do, and those discussions with the IEC are progressing. So there's a very strong relationship that we've got with them. So there is that allocation, and also the recognition that by virtue of scale, SABC is a strategic partner to the IEC for the elections, and that's the discussions that we are continuing with them. Thank you.
Okay, thank you so much for the clarity, CE. Honorable Bodlani?
So I don't know, Chair. For some reason, I think maybe something is wrong with my mouse or something. Chair, thank you so much for the clarification. I think we are facing a really abnormal situation where we are being told that the public broadcaster has not received funding. And I'm happy to second your suggestion, Chairperson, but perhaps make a further request to say, I think it is COCTA, the Portfolio Committee on COCTA, that would be the custodian of elections. And I speak under correction if I could just get guidance on that. And I don't know, and perhaps as we write a letter, we also pencil in a joint portfolio committee meeting with the portfolio of COCTA and the Finance and National Treasury, just so that at least we are seeing from the same hymn sheet. Because and I appreciate you picking that up. I really, in my mind, could not have imagined such a situation. That's why it took a minute for it to actually register in my head. So I'm happy to support your suggestion, Chairperson, and with those further amendments. Thank you.
Thank you, Honorable Bodlani, for deepening my understanding and directing us that it is, in fact, COCTA that must be included in it. Thank you so much for that. Honorable Delisha?
Thank you very much, Chairperson. No, with the clarity from the CEO of SABC, I think it makes sense, Chairperson. We cannot have an SABC that will not be able to do what is expected of them at this critical time. So yeah, it makes sense for me too, Chairperson.
Thank you so much, Honorable Bodlani and Honorable Delisha, for supporting the recommendation. Secretariat, you have heard the honorable members and the decision of the Portfolio Committee. Kindly please draft that communication, and as Honorable Bodlani has suggested, also consider a joint sitting between us and COCTA so that we are on the same page. Thank you, colleagues, for your very robust engagement. Thank you to SABC. I hope that our last decision shows that we are a responsive portfolio committee that will intervene when we pick up that there are significant gaps. Thank you all so much. I know we've really invested a lot of time. It's already 1 o'clock. Can I then seek the assistance of colleagues that we allow at least an hour? There is no sitting of the House, so that we can take a very important presentation from the post office, which is another one of those entities that I say that is sitting in the ICU of our portfolio of entities. So if there is, Honorable Bodlani, your hands are up.
Chair, can I please ask for at least 10 minutes comfort break? We really have been sitting down taking the presentations, and then we come back and give you the hour as you are requesting, please.
Thank you so much, Honorable Bodlani. Colleagues, let's break for the next 10 minutes. We will pick up the conversation at 13:10. Thank you so much, Honorable Bodlani, for supporting me. I'll move on to the last item, and that is to receive the presentation from SAPO or Post Office. I've seen the BRP is represented here, Anish Ruplal. Anish, I'm assuming that you will be leading the team and the presentation for the Post Office. Mr. Ruplal.
Thank you, Chairperson. Sorry about darkness of the video. Honorable Chairperson, honorable members, Minister, Deputy Minister, officials, colleagues, a very good afternoon to you. Thank you for allowing us to present the Q1, Q2 overview. I've got, so for my side, apologies from the joint BRP, Mr. Juanito Diamonds. He unfortunately could not make it, but his representatives are on the call. Apologies from the acting CEO. She was on the call earlier, but she had to leave, unfortunately, for another commitment. Chairperson, joining me to present today is our acting CFO, Lenny Govender, and we've got Solly Gaba, who will talk through some of the operational aspects, and the other team members from the BRP team that's on the call as well. I'm not going to introduce all of them, but they are available, should we need to address any questions or comments. Just from a refresh perspective, as we all know, and we've presented on many occasions to this committee and the members around various aspects and the status of the business rescue. But very quickly, as a refresh, the entity was placed into business rescue on the 10th of July, 2023. The business rescue plan was voted on by the majority of creditors, and it was adopted on the 7th of December, 2023. And that was effectively the date when the BRPs could effectively start doing our work and implementing the plan. A key condition of the entity being placed into business rescue was the provision of funding from the sole shareholder, which is government, of 2.4 billion rand. There were two tranches, and of course, the second tranche of 3.8 billion. The 2.4 billion was received, and we've accounted to the committee as well in past presentations. As we're all aware, we have not received 3.8 billion rand, and that's a significant material component that remains outstanding. And of course, in our previous presentations, Chair, we did highlight the achievements of the business rescue, the challenges, and of course, the risks of not receiving the 3.8 billion rand. That's a quick overview, which then leads us into the 6 months overview. So as a result, obviously, of not receiving funding, the operations continued. We've run the business with management, but under severe austerity measures, which we had to introduce. And as a result, this was to allow the entity to continue to deliver on some of the key revenue aspects or the key services that we are offering, to the South African citizens. We have a social mandate in terms of the postal service obligations that we have on the organization to provide postal services to all citizens of South Africa on a basis that's affordable and accessible. So as a result of the austerity measures that we had to implement, there was no real opportunity for any capital maintenance and expenditure, as well as any revenue diversification initiatives that we had in mind. So the primary focus has been on revenue preservation and cost management. That did help us to continue on the basis of austerity. But having said that, they did result in a reduced loss, though. We are in a loss position, but it was a reduced loss of 87 million rand for the 6 months ended 30th September 2025. Now, when we hear the word loss in this sentence, you may think automatically it's always bad. But as Lenny will highlight, even though it's a loss, this has been an improving position for the entity. Working capital management continues to remain a priority for us. We are not out of the woods yet because we have no funding. The funding cycle or the working capital cycle is very tight. The 18 cents dividend, just as a refresh, we paid the 12 cents dividend, which was the first dividend from the 2.4 billion that we received during the earlier stages of the business rescue. The 18 cents dividend, which is payable to statutory and payroll creditors, was always dependent on the BRPs receiving the second tranche of funding in line with the adopted business rescue plan. And as highlighted, that 3.8 billion remains outstanding. It has not been received. So we are paying our liabilities in the ordinary course of business to the extent that we are trading. And on the austerity mode, we are currently meeting our liabilities in the ordinary course of business. This, however, has been assisted largely by the TERS funding, which we were successful. The BRPs together with management, we got, and as a requirement, there is no need for financial statements to be audited in a business rescue, but we took the decision to have our audits done. And as you know, we are up to date with our audits. There's, even though it's disclaimed, you'll see the number of findings have been improving over the last 2 years. So the result of having audited financial statements allowed us to apply for the TERS funding. The first round we were not successful. The second round we were successful, and the Post Office was granted funding of 309 million rands to assist in bridging our working capital deficit. We are supposed to receive all 6 tranches, or all 6 payments by November 2025. However, we've only received tranches 1 to 3, which amounted to 167 million rand. That was received, the last tranche, like I said, was received in November 2025. So the remaining tranches, we are awaiting those payments, and we're hoping to receive that within this month and next month, i.e. February 2026 and March 2026. Chairperson, you would recall there were also discussions around termination of the rescue, and in that regard, there were aspects that needed to be fulfilled, and that includes an appointment of a board of directors. We are still awaiting that that ministerial appointment of the board of directors, and accordingly, we will then be able to appoint CEO, CFO, COO, and those approvals are also. We are awaiting those aspects as well to continue with that, with those appointments rather. So this is a brief overview, Chairperson. I'm going to hand over now to Lenny, who's going to take us through then the numbers and the performance for the 6 months. Thank you.
Thank you, Anush. Good afternoon to the Honourable Chairperson, Honourable Members, the Minister, Deputy Minister, and the colleagues present. So the financial performance covers the 6 months ending 30th September 2025. In terms of SAPO's revenue, we received revenue of 929 million rand. The revenue increased by 9 million rand or 1%, so we have a marginal increase of 1%. As Anush indicating, the priority was to preserve the revenue base, so we're seeing the revenue increasing by 9 million rand. The main contributors have been postal services and parcel revenue of 437 million rand, increased by 17 million rand. We saw a slight decline in the financial services revenue of 4 million rand. So the financial service revenue of 153 million rand declined by 4 million. We also had property revenue, which is the rental income for properties at SAPO as excess capacity, where we have 49 million rand, and also the interest revenue of 28 million. Further to that, we received the subsidy of 249 million rand for the 6-month period to fund the universal service obligation. In terms of SAPO's expenses for the 6-month period ending 30th September, the year-to-date expenses was 1.2 billion rand, which declined by 191 million rand, or 14%. Staff expenses makes up one of the major contributors of SAPO's cost base. The staff expenses was 724 million rand, also declined by 141 million rand, or 16%. As at 30th September, SAPO had employee base of 5,724. When you look at SAPO's other operating costs, which includes the transport costs, the property costs, IT depreciation, and BRP fees, and security costs, that cost of 475 million rand declined by 50 million rand, or 10%. As Anush was indicating in terms of the operating income, the non-operating income, we had TERS recognized of 183 million for the 6 months. So in terms of the 6 months ending 30 September, 183 million was invoiced to TERS, and we recognized as income in SAPO's records. When we look at the net loss position was 87 million rand. So the net loss position is reduced. So even if we were to exclude the TERS allowance of 183 million rand, the net loss would have been 270 million rand, excluding the TERS income of 183 million rand. When you compare that to the year-to-date loss for the same period the prior year, the net loss was 471 million rand. So in terms of the 87 million, there's a significant decline in the net loss. Even if we were to exclude the TERS allowance, the net loss declined by 201 million compared to the prior year. So even the decline in net loss has improved SAPO's working capital. This slide just covers SAPO's revenue in terms of what the major revenue contributions are. As indicated, SAPO's revenue of 929 million rand increased by 9 million rand or 1%. We see postal services and parcel revenue of 437 million rand, increasing by 17 million rand. And we had the financial services revenue of 153 million rand. And then what the financial service revenue includes the major contributors are motor vehicle licensing of 190 million rand. Also 17 million recovered from Postbank for the utilization of SAPO branches. So the SAPO branches that we provide service to Postbank, we recovered 70 million rand. We invoiced Postbank. And then also SAPO also assists with the DTT project. For the 6 months period, we invoiced DTT 14 million rand. We also had sundry revenue of 30 million rand. So in terms of the sundry revenue, including the sundry revenue is 4.7 million for e-registered platform, which was launched in the prior year. So we have recognized 4.7 million, which is trying to move to electronic base. 249 million rand was for the subsidy for funding the universal service obligation for the 6 months period. Expenses for the 6 months period ending 30th September, total expenses was 1.2 billion rand. The top 5 cost drivers, which include staff, which contributes 88% of the top 5 cost drivers, 88% of SAPO's cost base. The first one is staff expenses, which contributes 724 million rand. We have the property expenses of the property rentals and utility expenses of 147 million rand. We have the transport expenses of 59 million rand, IT expenses of 76 million rand, and the security expenses of 61 million rand. When we look at SAPO's balance sheet or statement of financial period position for the 6 months ending 30th September, SAPO had a total asset base of 3.1 billion. The main contributor of that total asset base makes up of the property equipment and heritage assets of 1.8 billion. The heritage asset includes the stamps that we call it philately. That is heritage assets about 46 million rand. So the total property equipment and heritage asset makes up 1.8 billion. We also have the trade receivables of 161 million rand. And if you see in the past 12 months, we have been reducing the trade receivables to improve the working capital. And we also had cash and cash equivalents of 790 million. And we had other assets of 336 million. In terms of SAPO's net asset value for the 6 months ending 30th September, the net asset value remains positive. So we had a net asset value of 554 million rand. In terms of the current and other non-current liabilities, we have 2.5 billion rand, which is made up of the trade and other payables of 1.1 billion rand, which also includes the 18 cents dividend of 509 million rand included in the trade and other payables, which is the 18-cent dividend. We also have the post-retirement benefits of 478 million rand, and we also have the tax liability of 340 million rand due to SARS, and we have the other liabilities of 612 million rand. So, Chair, this covers the financial position. I'll hand over to Solly, the acting head of operation, to cover the key performance areas. Thank you. Solly.
Good afternoon, Honourable Chair and the Honourable Portfolio Committee members, our Minister and Deputy Minister, and all our other colleagues on the line. So if we look at our key performance indicators, Q1, we were at 40% achievement, and we moved to Q2. We've moved one up. We are now at 50%. And then I will cover the ones in red. Onto the next slide, Lenny. The ones not achieved. Okay, so if I look at KPI 1.1, Honourable Chair, if we look, well, just in total, we had 6 KPIs that was measurable at the end of Q2, 3 which met the desired target. And as I mentioned, this was an improvement from the 40% to the 50% compared to Q1. So we look specifically at KPI 1.1, the achievement of the annual budgeted revenue, which includes interest and sundry revenue, but excludes the property revenue. Year to date at September 2025, Our actual revenue was at 632 million, falling short of the target by 243 million. So this is against the budget. And then on the year-on-year, as Lenny has indicated, there's been a marginal increase. So the main reason why we fell short of this budgeted figure is that we have found that as businesses are becoming more and more under pressure, they are also busy with cost-cutting measures, and they are digitizing their postal services. And we see this trend will continue. This is a worldwide trend, which we cannot escape. While traditional postal services saw a marked decline in revenue, Honourable Chair, I must say that our hybrid mail printing is doing exceptional well. SAPO have made a lot of efforts in ensuring that our printers are up to date. They are new and they are functioning well. It should be mentioned that SAPO is operationally totally ready for the ORTO rollout. So we have made absolutely sure that from an operational point of view, we support the ORTO rollout. The sales team is in the process of finalizing the ORTO service level agreements with the municipalities. So we're 100% on that one. Then as Lenny mentioned, on the financial services side, our MVL revenue performed negatively against our budget, but positively compared to the previous year due to more branches that we have been able to get online and active. And we see this trend expecting to continue. We have seen some big growth in the Mpumalanga province as well. We are also doing localized marketing to increase awareness of the service offered by SAPO. So we've got a full on-the-ground marketing program to ensure that we up our services there. And then also in terms of further effort being put in here, we've got a very high focus placed on incoming international expedited mail services. And we've also done some proof of concept on e-commerce door deliveries. Yeah, I should mention that what's holding us back is further investment that's needed to roll out the services, as we need handheld devices to provide proof of delivery and card payment machines for collecting the SARS custom payments. Then when we go to KPI 1.2, optimizing the other revenue streams, here the focus was predominantly on the property portfolio. And there was a baseline target set for Q2 at 73 million. So the progress that's been made through this portfolio at year-to-date Q2, our property revenue was at 48.5 million. This is up by 19.9 million, nearly 20 million up over the same period of the previous year. And that's an improvement of about 70%. Our properties division is still confident that the target will be reached by the end of Q4. SAPO has completed its property strategy with its main focus of monetizing all unused properties. So there's a full program unfolding there. Then on KPI 1.4, this is the service delivery standards as prescribed by ICASA in the delivery regulations. So for Q2, our performance decreased by 1% to 78%. It was down from 79 Q1. This is 14% below the required 92% delivery standards set by ICASA. Now, I need to mention here that these delivery regulations were approved by ICASA in the year 2012 and have since not been reviewed. When we applied for the new license application, we proposed new delivery standards to make provision for the new era that we are delivering in. And I want to just mention here the two main reasons why we are not getting to the 92%. And I also need to mention that since BRP's process unfolded in 93, we reached a level of between 78 and 82% in November of 2024. and we have maintained that level. But to push that up, it needs some definite funding. So the two main reasons, as I mentioned, is funding, austerity measures that we had to implement to keep costs down. We have many routes where the volumes have decreased to such a rate that it is very uneconomical to run them on a daily basis. So we had to reduce the frequency there, and obviously that then impacts on that other 12% we need to up. Then also critical, as part of the BRP process, was the consolidation of the delivery depots and delivery offices, where this consolidation was focusing on the introduction of motorbikes and telemetry projects, and this had to be halted due to investment that was needed. So this project aims to give postmen a larger area of delivery, and it will come with substantial lower cost. And that project, unfortunately for now, is still on hold. And then, Honorable Chair, we experienced severe heavy rains in the coastal areas in Q2, and this obviously had a knock-on effect with our delivery standards. I thank you, Chair.
Thank you, team. Thank you, Chair. I think we'll hand over to you now. That concludes our presentation for the session.
Thank you, Anish. Thank you so much for that very succinct and precise presentation, and a very progressive presentation, I must say. We noted the growth in revenue by year-on-year of 1%. The postal revenue and parcel revenue increased by 4%. Your year-on-year expenses dropped by 14%, and your net loss has dropped has also dropped. I think that's a very progressive sign from the last time and from the conversations we have been having. So I think, and well done, and congratulations to you and to the team that continue to remain resilient to ensure that this national asset stays afloat. So it's welcomed, and congratulations to you and the team. Colleagues, we received a very short and precise presentation from SAPO, one of those entities as well that has been struggling, but again, like other entities that have come before us, and as we have witnessed as a portfolio committee, have shown resilience and have clawed back. We note that over 5,700 employees are supported by this. We also note that they've achieved a 50% employee wellness program, and I think employee wellness is something that we had observed during our oversight to the post offices. So the presentation is before us. I welcome you to engage the presentation. Thank you, Honorable Bodlani. Honorable Bodlani, I recognized you.
Thank you so much, Chairperson. Chair, indeed, we welcome the update on the South African Post Office. And the first thing you see with the presentation that we have just received talks about re-engineering. It is unfortunate that with the presentation that we have seen this afternoon, there's no real sense of the future of the post office post-business rescue, where we are also seeing high executive positions remaining vacant. So it would have been a bit more encouraging to really get a better understanding of what the future looks like post-business rescue, because it is my opinion that that's the conversation that we must be occupying ourselves with. While we appreciate that there has been changes, there has been improvements, those cannot happen in isolation with us not understanding what that means for the employees of SAPO, whose futures hang in the balance. And I'm going to make my last political statement for the day to say, Chair. Post Office is another organization which exactly speaks to failed policy decisions, where we talk about universal service obligations, but we do not provide proper legislation, proper governance, and proper oversight. And the big question then becomes, what are the lessons learned if we are going to go into continuation of repeating the same things and we just do not stop? There has to be a point where, as South Africa, as government, we stop repeating doing the same things, looking for a different outcome. The reality is that over the years, Post Office has failed to really move with the times. And again, it is coming back to bite us. That would have been my political submission, Chair, and I'm not asking for a response on that. Chair, I think with the greatest appreciation that the business rescue process was an intervention by the court to avoid liquidation of the Post Office. And I am on record as saying this was really just avoiding the inevitable. And sitting where I'm sitting here today, I really am convinced that we are really still on a downward trajectory with the Post Office, precisely because there is no strategy and this makes me worry when the business rescue practitioners tell us that and that they have improved on their mail delivery standards, where they are now at 78%. Is that an independent figure? Is that a figure that ICASA can improve, can verify? And then the question is, if they really did this well, what was the magic that brought them to a 78% standard delivery in the past year, when they, in the same breath, have told us that they lack the infrastructure to make the post office work, such as bikes. And I would go further and say, such as the workforce, that they do not necessarily have the personnel to really carry out the mandate of the post office. So if they could just take us along in terms of what and how they achieved this. And I think, Chairperson, it would be amiss for us to not have a conversation about the 1 kg parcel exclusivity and the mailing standards that are set at 92% by the regulator. There is a very good article on the internet that really spells out how over the years again, the post office has really failed to meet those standards delivery standards. And I'm obviously not going to put blame at the feet of the business rescue practitioners, because this really just precedes them. But we cannot have the conversation about the 1 kg in isolation. It is one thing to have a right, an exclusive right to carry out a service. And when you are failing at it, it would be irresponsible of government to not make an intervention. So I just need to really say that. Chair, the more we get presented, the more we get presented with the business rescue, by the business rescue practitioners today, my mind kept going to the employees of the post office. In 2024, it was reported that the business rescue process had cost South Africa 175 million. I'm tempted to think that it is possibly standing at almost double, considering that the rescue process started in 2023, that we are clearly plus minus 300 million with the process. And perhaps this, I don't even know who I should be asking this. How do we explain to South Africans that, granted, we understand as legislators that it is an outcome of a court process? How do we explain that the government has spent 175 million plus, not in keeping jobs, but in keeping alive an organization whose future sitting here today remains in the balance? I think we are being irresponsible as lawmakers if we are not having an honest conversation about how people lost their jobs, but business rescue practitioners are working smiling all the way to the bank. And we did not also quite hear what the exit strategy is. And I think this is also an opportune time for us to really be taken on board in terms of what the exit strategy is. And perhaps once we have answers on what the exit strategy is, Chairperson, you will allow us a brief follow-up so that we leave this meeting with the same understanding as where the business rescue practitioners are. Thank you so much, Chair.
Thank you, Honorable Bodlani. Honorable Kedisha.
Thank you again, Chairperson. Chair, the post office revenue is still below target, especially in traditional mail services, right? And I must state that I do acknowledge that there's small growth in digital services, you know, things like your motor vehicle licenses. But I just want to know, why is the post office still failing to meet the set mail delivery standard? And what is being done to fix this? And I think we're not asking this for the first time. Is there anything that is being done to fix what seems to be a problem for them, because they keep failing to meet the set mail delivery standards? I just want to know what the plan is, Chairperson. And you know, Chair, there's nothing that would ever be more evil than the fact that whenever entities want to cut costs, they do that through staff reduction. The first people that they look at, it is the staff. You cut staff, and when you don't meet the targets, you say that you are not capacitated or you have no capacity. Of course, you have no capacity because you got rid of the staff. And it's not the first entity that does that. It is disturbing that we are sensitive to the fact that we are dealing with the crisis of unemployment. But every time that, you know, cost needs to be cut, the first people that feel it or the gun is pointed at, it would be the staff. So I just want to know if the post office has any plans, you know, to protect the remaining jobs.
Recording in progress.
Just ensuring that, you know, there's fair working conditions for those who remain, Chairperson. And maybe my last point, Chair, the post office is heavily reliant on government support. And without the subsidies and your relief funds, they would have lost hundreds of millions. And perhaps, can we be told what is being done to secure the future of the South African Post Office? I say this because the promised 3.8 billion rescue package hasn't been allocated. So what plan is there, or what plans are there to prevent the collapse of the post office? And maybe they can share with us, you know, I think Honorable Bodlani was asked this, but can they share the long-term plan for sustainability, so that we just, you know that there is no possible collapse? Thank you very much, Chairperson.
Thank you, Honorable Delisha. I see no further hands, so I'll ask my questions. Maybe let me begin by indicating that, start off with the property portfolio, and my observation that the property portfolio is worth 1.84 billion rands, and yet the revenue contribution, the property revenue contributed was just 49 million rand. Now, KPI 1.2 reflects a shocking 0% achievement against a 2.5% target for property revenue optimization. You know, colleagues, this represents a colossal failure to extract value from state assets for the benefits of of South Africans. Now, why is maybe SAPO failing to leverage the significant property portfolio of 1.85 billion? And maybe what is being done to address this underperformance? You know, during our oversight visit, we always see state entities hiring premises from the private sector and paying phenomenal amounts. And the question often we ask is, why can't we hire from our own underutilized state assets? So I think this question must be answered because we're sitting with a significant amount of property. Now, the observation is that the SAPO is still waiting. That's the first question. The second question is SAPO is still waiting for, and I quote, ministerial appointment of the board of directors to take over from the BRPs. Now, Honorable Bodlani spoke of the exit strategy. Now, an exit strategy cannot be part of an exit strategy is to appoint a board of directors that will take over. Now, we must get an answer that why is it that we're still awaiting ministerial appointment of the board of directors to take over BRPs? Because that talks to there be no progress being made to ensure that there is a seamless transition post BRP. Well, similarly, the third question then will be is that SAPO remains, and I quote again, awaiting approval to proceed with the recruitment of the CEO, the CFO, and the COO. Now, how can we as a committee have confidence in SAPO's recovery when the most critical executive positions remains vacant and this recruitment has not yet commenced? And again, this connects to directly to my former question regarding the establishment or progress towards the establishment of a board on whilst we speak of an exit of BRP, and this committee has been vociferous from day one that we ask the question from day one, what is the exit strategy? So what is the rationale behind this? Because this is really concerning me that there is no progress being made towards that. My third question would be around, I think my colleagues have covered me, around IT expenses. It amounts to about 76 million over 6 months. Yet SAPO urgently needs to digitize and to modernize to compete with contemporary logistics operators. Now, is this the level of IT investment sufficient to secure SAPO's future in an increasingly digital economy? And maybe what IT projects have been delayed or abandoned due to austerity measures? Now I want to talk to two critical issues because I know Honorable Bodlani spoke about us. She would have wanted to see a refurbishment or revitalization program. And I recall when we visited either the post office or we had a virtual presentation where we did receive, I think it would have been Fatima Ghani would have made a presentation to us about the various plans, etc. So I want to talk to two elements that are concerning me. The one is we had a proposal, an RFI request went out. And there was a cutoff date, and it probably would have been, I think, November, December. Now, what was the response to that RFI? Because that talks to partnerships. One of the way of digitizing, refurbishing, making it purpose for the future was to enter into strategic partnership with an honest realization that we can't do this on our own. We need to have strategic partnership, and hence there were RFIs. So what was the response to that? What was the number of people who respond to do that? When did they respond? We never get any feedback in this. I was hoping that this presentation will talk to that because that was a critical intervention, to really collaborate with private sector to revitalize. Then the next question is linked to that is the announcement made by the Honorable Minister in the Gazette. I think it would have been on the 12th or 11th of December, around about that time, regarding the removal of the exclusivity clause of parcels. Now, that was a seriously damning announcement that, in my view, of course, because that speaks to the very heart of the universal service obligation of the post office to be able to deliver these parcels at an affordable cost to the far-lying areas. What informed the minister's announcement in that gazette? And then more importantly, what would have been the impact of that to, I'm assuming, all those who expressed an interest to partner with the post office in their various business proposals? What was the impact of that announcement on those proposals? And also maybe given the fact that, firstly, what informed that decision? What was the impact on those RFIs? Because that certainly compromises. I mean, if a guy came and said, you know what, I want to introduce this procedure and that procedure so that I can get your 1 kg parcels moved around the country, etc., etc., etc. And then suddenly the minister makes this announcement, and this person who was going to make an investment, surely he made a business decision, there would have been an impact. So as a committee, I'd like to know what was the impact. And maybe finally, we know that there has been an ongoing case regarding this matter of this parcel in court, and we would have incurred expenditure as government in defending that. And does the minister believe his announcement then would have been untimely? I mean, would all those expenditures incurred to defend the position, what then happens to all those costs following the minister's announcement? So those would have been my questions, and I think Honorable Bodlani has asked for an exit strategy. So as the post office responds, maybe we'll ask the minister to start to respond, because I think the minister should speak on the exit strategy, and then we'll allow for further follow-up questions. Minister,
sorry, Chairperson, please recognize me. I've had my hand up.
Sorry, Honorable Felicia. Let me recognize you, Honorable Felicia.
That's fine, Chairperson. No, I forgot one more point. You tried to touch on it, but I think let me ask it. And it is with regards to the governance issues, because the governance issues remain at the South African Post Office. I just want to know, because I think we know that they have no permanent board, no CEO, like you were saying, and you know, they had the worst rating possible. And I just want to know, when will the leadership be appointed? Because we're bound to have the instability without leadership. So I wanted to do that, and maybe they can share with us what is being done to fix the financial mismanagement that we see. Thank you very much, Chairperson.
Thank you so much. Maybe, Minister, let me hand back to you to lead the responses, because there's been some pointed questions to yourself.
Thanks very much, Honorable Sibrathi, for those questions. Let's start with the issue of the board, because that lies with the executive. So I've dealt with it, Chair, through you. I'm going to ask DDG Ngobeni to just detail to the committee the layers and the process with regards to finalizing the appointment of the board, because there are 3 key layers that are time-bound, dependent on the number of applications received, the screening that is done, how long the recommendation for individuals to be considered. But where we are right now is that the selection panel, or the appointed panel to do the shortlisting, completed its work, and it has made its recommendations to the ministry, and we are studying those recommendations. What would then happen once that is done is, of course, there is a cabinet process. The cabinet process goes, as members would know, through the committees and ultimately to cabinet. That layer then deals with the approval. And there are instances in which, in going through the cabinet processes, the recommendations get accepted as they are, which is the speedy response, or in some instances where cabinet and its committees may feel that there are reinforcements that would require then going back to do this. So it's not as if there isn't inaction on finishing the process and concluding with that process. But once I've dealt with all the questions here, I think it's going to be very valuable for DDG Ngowen to just have a very brief, concise outline of that process, so that members have an appreciation that what impacts the duration of finalizing the appointment of a board isn't just one factor, that there is slowness from the ministry wide. In fact, there hasn't been slowness. And the committee would recall that even in all our interactions, I've underscored the importance from our end to finalize the appointment of the board. That's it. Then secondly, on the issue of the appointment of the executives, I think it's very important that this conversation is had in totality with regards to that board, because one of the good ways of actually empowering boards to do their oversight and their actual work is also part of the appointment of executives, and that becomes an important function that they do. But we are confident, Chair, that by the end of the appointment of the boards, which has been attributed to be the source of delay, including for the appointments of the executives, will be dealt with. Then to deal with the question that both you and Honorable Bodlani in part touched on about the exclusive rights on reserved services. Members would recall that in mid-year last year, we issued a policy direction for comment, particularly on the renewal of the exclusive rights. And that solicited responses. To my accurate recollection, there were 7 responses to that policy direction. 5 of the submissions indicated the view that the reserved services should be amended. I think 2 indicated that those should be kept, and I think one of the 2 was probably from the post office. In addition to that, and on the foundation of those comments, the department then did a market analysis which encapsulated those submissions in comparison with what is happening in other markets, be it on the continent, including in some BRICS countries, to do a comparison of what is the regulation on the small parcels, not on the small parcels per se, on the reserved services, particularly for exclusivity, and where is the market going in that direction. And that report came with two recommendations based on what the department found it. And in the interest of openness, Chair, I'm going to state what those recommendations were. One of which was to look at a potential extension for 3 years while doing a market review, or looking at liberalizing the exclusive rights in order to open up the market, particularly looking at some of the advances that have been made in the market and the gaps that were existent that are taking place in the market. So that is what ultimately informed their decision around the gazetting of the removal of the exclusive right on parcels under 1 kilogram. It wasn't thumbsuck. It was on the basis of, one, the consideration of those submissions that were made, and also the market analysis that which was done, that then presented the options, because as you would correctly recall, that was due to elapse. And then secondly, I think there was a fundamental question raised. Thirdly, there was a fundamental question raised around the issue of funding, which, if I were to retrace my steps and go back to the very beginning of this engagement, I indicated that, a large part of the problems that confront these entities, and particularly the post office, and we have handled with the issues of the SABC, so I won't retreat into that, is that there has to be funding for social obligations, and those can be optional because they are imposed in there by our constitutional requirements. When there is a mismatch between the resources allocated to execute that, we then end up with the kind of challenges that we are having right now. And I think credit to the efforts of the team from the department, and we've provided support in that. There's been numerous engagements with National Treasury around, just at the very least, underscoring the real pressures that exist based on the environment that the post office is in, and also the historical influence that has happened, that even culminated in the business rescue. Of course, that is an ongoing conversation, and at some stages, including when the process for the budget was done and all the requests for additional funding, or even funding that was supposedly committed were made, and the response has been where the response has been unfavorable, that has been shared openly, because I think that happens in the public domain. But I think what must also be recognized, Chair, is some of the proactive efforts that the leadership of the department, led by the DG, has taken, in particular, in making sure that at various intervals funding is found for the post office, including, as committee members would recall, the 150 million that was found in the 2024-2025 financial year, and even including this resource of the TES funding that is being attributed to, in order to keep the wheels running. But we are in a battle against time, and a battle against no sign of any massive capital injections coming through. So we've been finding funding along the way to sort out short-term problems while the long-term problem exists. On the question of the partnerships, you're absolutely correct that in December the RFI was published, inviting private partners with an interest to pursue partnerships to be on board. Those responses, to my recollection, were in the range of 80 to 100, but the team can confirm the accurate number. And as things stand, what is currently happening is the team is doing a summary of the various proposals to check various things, ranging from compatibility in terms of strategic direction, areas of partnerships, resources that could be potentially pledged in areas of operational and strategic partnerships. So the reason, Chair, that hasn't been presented, at least by the department, to the committee, is because the work on the analysis of those actual proposals hasn't concluded, and the team led by the DG and DG Ngobeni and their supporting team had been doing the work of reviewing and analyzing those partnership proposals. Thank you, Chair.
Thank you, Minister. Mr. Rupla, you want to respond to those questions directed to you?
Yes, Chairperson, I can. I just see there's another hand up. Do you want me to go first, or would you like the DM to respond?
1 second, please. Okay, let's recognize DM. There will be follow-up questions. So, DM, I recognize you.
Hello.
Yes.
Thank you. Thank you, Honorable Chair, and thank you, honorable members. I think, at large, all the relevant issues again have been stated, and I think the Minister has gone a long way to respond to a number of these issues. And one has no doubt the department in unison has been working to do the best to ensure that the 3 phases the BRPs would have designed to actually revive the post office, those phases are attended to, that is stabilization, sustenance, and the future-proof. And of course, as we know, they required a funding as articulated in the court application, which unfortunately did not happen. A lot of interventions, as it was stated by the minister, have been attempted to keep the post office afloat, including the tiers and so on. So it's one of those unfortunate things which I think could have been avoided, but because now we are confronted, for instance, by a situation where a good idea for the exit of the SAPO, of the BRPs, which was a good idea, because that idea allows a situation where when the department negotiations, whoever could be the prospective partner, it actually negotiates whilst it is in charge, because post-exit, it means government is in charge. Now, as we speak now, the BRPs are in charge, and there's been collaboration towards exit so that we negotiate as being a trusted negotiators because we're in charge. But now the what to call the cash threat, which actually undermines the 6 months period, is a serious issue that needs to be attended to. But having said that, I would have been it would be remiss of me if one would not have spoken on the on the exclusive the exclusive right, the 1 kg staff, which led to the minister gazetting in the manner the minister has gazetted. I just wanted to express my view that it is one area, with all the efforts that the minister has been involved in dealing with this matter, is a decision, in my view, that I think was the most unfortunate decision. Because that decision it deals with a part of the key sustaining elements of the post office, which was not badly run by SAPO before. But going forward, it actually represented a huge potential to contribute to the sustenance of the of the post office, so that the post office continue to service the poor people without discrimination on the basis of the fund scarcity. It is one area where the minister knows my view, that I don't think we were together, we're at variance on that one. It's a decision that over and above, I don't think we had discussions about it in the department, because the minister is speaking about all the recommendations, the sort views and so on. Is in the bigger scheme of the beautiful work done, that to me is an unfortunate spot in this area. Thank you.
Well, thank you, Minister DM Bungubele. I'll come back with some comments in the second round. Let me go to Anesh. Anesh, can you respond to sections applicable to you, please?
Thank you, Chairperson. The colleagues on the call will also help with some of the questions. So thank you for the questions and observations, firstly. So I think just some key points to note, from a theme perspective. The post office was quite actually, the Honourable Members mentioned that, it was in liquidation. The application was made to bring it to rescue. When the BRPs arrived, unfortunately, everything was at a standstill. Mail was not moving. We had a lot of dilapidation, neglect, and we really had to kickstart and get this operations going from scratch. In addition to that, we had we had elements of a lethargic workforce, a bloated workforce, and that's, we had a lot of challenges on the ground. So whilst it's never a good thing to have retrenchments. Unfortunately, we had to, look at that aspect and retrench. That was not the only area that we focused on to save costs. The other big area was to optimize the branch network, because there were duplications and so on. And again, we had to bring and balance out relevance and sustainability of the post office to the current cost structure that it has. And quite simply put, the cost structure was way out of line to the levels of revenue. So when you are aligning the revenue base to the cost base, one has to be practical and realistic. Yes, we would love to have everyone employed, but that would mean that the post office will need 3.8 billion every year then, which is also in itself not sustaining just to save jobs. But we understand the sensitive aspects of that. And, we worked very closely and consulted with the employee unions and so on. And, we're very responsible with that process. It was a hard decision, but it had to be done. And I think if you look at the dilapidation of exactly that equipment, properties, and the question was, well, how did we get the delivery standards to 78%? We had to make a plan with whatever little money that we had. And, again, we had to kickstart certain things. For example, the mail sorting machine was not operational. We had to, again, find money, get that up and running. We then had to negotiate our international mail carriers because no one was willing to do work and transact with the post office because of its liquidation scenario at the time. So, again, with the plan being adopted, with us paying 12 cents and compromising the creditors, we were able then to negotiate back with suppliers that we were wanting to then now, in the back of having some level of confidence back into the post office, they were then willing to transact with us. So we then activated, for example, the two of the international aircraft carriers. We were able to get international mail going again. So things started moving again, and we're in the business of moving parcels, letters, mail. That is what the business is. It's a logistics business as well. So all of that kickstarted with minimal investment. Obviously, we had the 2.4 billion, which helped us, to secure another very key aspect, which was the data center, which is key to our digital strategy. We had to secure that because that was on the verge of crumbling. We wouldn't have had a digital, the basics of having to kickstart a digital strategy. So those are some examples, and I could go on and on. But I think the main aspect here is that we quickly, and with the limited funding that we had, we started switching on aspects of the business, and we had to collectively then do that with management, and we worked hard, and we worked hard every day until we got to a point that the entity, after the compromise, we had circa 9 billion rand worth of debt on the balance sheet. Okay, the business rescue plan through the compromise eliminated that debt. As you saw from the financial results, we are now solvent. Okay, our assets exceed our liability, which was not the case prior to rescue. The cumulative savings of the cost optimizations initiatives. The post office is saving circa 1 billion rand a year. Okay, and yes, there's only so much you can do on the cost aspects, and we've rationalized all of that. Our next focus then, and that's how we stabilized the post office. We had to then focus on our clients to keep on getting the delivery centers up so we could protect and preserve the current revenues, which is what we've done. And again, you saw from the results that there was improvement in the net loss positions and so on. So the reason why I'm responding in this general aspect and the theme aspect, because it covers a lot of the questions that we raised. We had to do what was necessary to allow the post office to survive. Then there was a question around, just before I move off there, like one of the other key investments we made very quickly was around our hybrid mail printers, which Solly did allude to earlier. And that was critical because we started identifying key projects that are key to the survival of the post office, one of them being the ARTO project. That project, we started with dedicated people, invested in that equipment, worked with the ARTO officials and so on, so that those tests and those pilot projects were run. So that is how we were able to get into state of readiness. When ARTO is activated, post office can then deliver. So that's another example of an investment. Then with regards to the partnerships and the 1 kilogram aspect. So again, with the response to one of the honorable members around what is the plan, what is the strategy? So there is only one plan, and that is the business rescue plan that was adopted by the majority of creditors. Our only obligation as business rescue practices is to implement the plan, which is what we've done. However, as part of the handover and the transition aspect, we went over and above what we are supposed to do as business rescue practitioners. We then, together with management, we then developed a turnaround strategy, which, Honorable Chairperson, we presented to this committee. It was in a closed session, out of camera. And, we had stated our reasons for that, for requesting that, because we felt there were certain competitive aspects to the presentation. Hence, we were granted the opportunity and we presented. So in that turnaround strategy, just some of the aspects that I want to highlight in order to answer the question now, one of the aspects that we made an assumption on was the sub 1 kilogram exclusive license that we had. With the 3.8 billion rand investment and other investments, this is one area around the logistics, the courier aspect of the business. We were hoping to kickstart that with investment or through partnerships. And we had modeled that in, having that exclusivity in the turnaround plan. Unfortunately, as we've heard, that's no longer, that's been gazetted. So that does have an impact on the turnaround plan. What does that mean? We were projecting to have a break-even strategy after X amount of years. All that means is that we don't have this revenue anymore from the courier business. We're hopeful through the RFI process of partnerships, some element of that can work. And if that doesn't, all it means is that the post office has to then generate other sources of revenues, which could push out the break-even point into the future. So that's a response. And then with regards to just some granular stats, and I'm going to invite Mkuve, who's been involved in the process, but some granular stats in terms of the RFI submissions that we made. So we received, we had a briefing session that was held for this RFI process. We had approximately 200 attendees at the briefing session, and there were approximately 100 submissions. So the minister did highlight that we are in the process of assessing that. That is quite correct. Together with management and representatives from the department, that process is ongoing. So we are running through these over 100 plus submissions, and we analyzing that as part of our duties and roles. So that's at a high level. I would like, Honorable Chairperson, with your permission, just to invite Solly and Mkuve just to assist to give further information to respond to those questions.
Thank you, Anush. With that being said, so I'm coming in on there was a question about what was the magic, and Anush has already alluded to some of the things that was done immediately. So, since SAPO got into difficulty, a lot of things fell away. And one of the biggest stabilizations projects was to stabilize the transport. So being a transporter of written communication and parcels, we are heavily reliant on transport and the frequency of transport. So as Anu said, international airlines were immediately stabilized. Contracts was concluded. National line haul was normalized. Regional line haul was normalized. We got a panel of service providers to transport postmen in certain areas. We procured more than 1,600 bicycles. They've been put into the system since then. And then the machines was in Cape Town and Johannesburg at Witspos. They were sorted out, and soon they were back to full capacity, sorting the letters. And then, once you've got that in place, you start to work on the other issues that are affecting your delivery standards. As you start to talk to your customers, you start to get pre-alerts. So we get pre-alerts from the Fushini group that the work is coming. We follow that through the process from start to finish. We're assisting the bulk mail mailers, cleaning their database, cleaning their addresses. We've embarked on a process where we have coached our regional general managers, our area managers with regards to managing dates on the letters. That's assisted quite a lot. And then we also focus on the high volume density areas. Gauteng alone delivers 60% of the volumes in South Africa. If you add Cape Town and Durban, we're probably looking at about 80%. So those are areas where the frequency is being run on a daily basis. So that you know, so that's got us to the 80% consistently. I also need to mention that on the international incoming EMS, the expedited parcel service, we've seen a tremendous improvement where we started beginning of last year, or the beginning of last year, we were down at about 10%. We are now consistently knocking on 95%, and we are now pushing to get to 100%. And we're going to see some growth as our international partners sees that that we are performing on that. Then on the USO, I also just want to mention that the post office is a volume-driven organization. So when the volumes are decreasing, our variable costs are increasing. So, you know, so where a postman previously used to, on average, deliver between 600 and 1,000 letters a day, that route now only got 100 letters. So it significantly pushes up the variable cost. So it puts a lot of pressure on SAPO to maintain that cost, because the postman must still cover that route, whether he's got 100 letters or 1,000 letters. And those are some of the intricate challenges that you face as a postal operator. Now, worldwide, and I know South Africa is unique in its own, worldwide research that we've done is that on the USO, that because the volumes have decreased, operators are heavily reliant on the support from government on the USO part, because without that you cannot maintain the delivery in the rural areas, because it becomes uneconomical to run those routes. It becomes hugely costly to do that, and no other operator in South Africa will take one item from Johannesburg to delivery in the north of KwaZulu-Natal, or to the south or the north coast of the Northwest Province. So those are some of the challenges. And so on the USO, worldwide, and I want to stress that postal operators are heavily reliant on the USO. Thank you, Anush.
Chairperson, I'm just going to ask Bukuvia to respond on the costs for the sub 1 kilogram, the legal aspects, and then I'll come in again. Thank you.
Afternoon, thanks, Anush. Afternoon, Honorable Chairperson, honorable members. I think I will try and be quick and mainly focus on the issues of the Gazette and this sub 1. Chair, first and foremost, from SAPO, we think that the Gazette negatively impacts the recovery strategy, because when you talk of delivery, we're looking at the three-phase: hybrid, bulk mail, and as well as small parcels. And it will be the same postman that will then deliver the three. Now, when one, which was a monopoly to us, is taken away, it then means that we still have to carry the cost for two, while we could have bounced off the costs using the same person to deliver the three. So that's what solely was the main talking to. But how that affected us, Chair, is there is a matter, as you all know, as you stated, Chair, involving three big suppliers. I just want to name them because it's a public record, is in court. We have a matter that was brought by Postnet, that was brought by South African Express Parcel Association, as well as Take a Lot Online. And all these three were present during the RFI briefing. They were there, they were interested in partnering with SAPO on various aspects. Now, when the Gazette comes out, it means they would either decide we're gonna change tech, because now we alone can participate in that sector without the post office, which is something that we're banking on. So they're gonna bring their parcels to us and we're gonna make money. But now they may feel, no, we don't need to partner with the post office, we can do it ourselves. and that revenue that would have been realized by Post through that monopoly then goes away. And that also impacts us in the sense that the matter was already ready for adjudication at court. I think everyone had submitted their heads of arguments. And on the 3rd of December 2025, Take a Lot then gave us an indication that they want to amend their papers and court their arguments. And only on the 14th, on the 12th,
what was the date? What was the date you mentioned?
On the 3rd of December, Take a Lot wrote to us and wrote to our lawyers that they want to amend their papers at court. They did not say what the amendment entails, and we are still waiting for them to give us that amendment. And then on the 12th of December, then we get the gazette that says the small parcel then falls away. Now, what that means is that case becomes mute. The reality is that both us and ICASA and the committees in ICASA have been fighting this battle, and at the end of the day, the fight has become academic. I don't know what will happen in court now when they amend their papers, whether it will all just then let go for our hands because it falls away. But it renders the whole dispute that both SAPO, ICASA, and including the Office of the Minister, because they were cited as respondent in there, have been fighting. And talking for SAPO, I've been there for about 3 years, Chair, and I have personally recommended payment to the attorneys appointed by SAPO, who we found to the tune of over 3 million. So that, as you spoke to the issues of the fees, would then become, in our view, fruitless and wasteful. And this is only during the part of the BRPs. There's still payments that were made even before the BRPs got into the office. So yes, it has a negative impact in terms of the sub-proposals that we're getting from the market, as well as now the fight that we've been having in court with Take a Lot and then Sky and so on. It becomes now academic. So that's as far as we have. But they did advise that they are still looking into the gazette, and we'll see how to carry the matter forward after we receive the amendment from Take a Lot. I think from legal, that's as far as we've got on that. Thank you.
Thank you, Mokue. Chairperson, I'll just be a minute. But I think in the main, we've answered most of the questions. I think the only one was around the property. Again, the property is strategic. There is a strategy that's in place, and it was also mentioned earlier by Lenny that we are working on a strategy to maximize revenues from the rental, from the property portfolio rather. Again, the key constraint here was again the dilapidation and neglect on the properties. So we needed funding, and we had allocated funding from the anticipated 3.8 billion to fix up some of the key properties, to get them rented out or to partner, make them the subject of partnerships. So not just taking the funding obviously has delayed this. So therefore we don't have the speed to accelerate that revenue generation, because again, it's a catch-22. We need money to make the money. But nonetheless, again, we're working with what we have. And again, there's been submissions from the RFI, and we do believe some of them are on the property. We will assess that. That potentially can then, result in an upliftment down the line under the directorship and stewardship of the new board and the executive team. Then I think finally from my side, I did highlight, the onset when I started speaking, that the 3.8 billion, the non-receipt of that, we highlighted during various presentations to this committee, and including our monitoring meetings that we have on a regular basis with the department and National Treasury. What the impacts, what we've always highlighted the achievements, the significant achievements of the business rescue of the BRPs, the business rescue practitioners. We've highlighted challenges on the way, but we've always highlighted the key risk of the non-receipt of the 3.8 billion and the potential impact that could even have on the business rescue process. Because again, the only source of funding is government. So we are not out of the woods yet. It is a big risk that we don't have the money. And yeah, so I think that's, I think I'll leave that comment there at that point. Thank you. Back to you, Chairperson.
Thank you, Anush. Colleagues, we've received the responses. I'm going to allow for a second round of questions
Honorable Pradhan indicated after the exit strategy has been responded to, we'll allow a second round of questions. Honorable Bodlani.
Yeah, thank you so very much for allowing a second round. I think this is a very important discussion, which really we are also hearing information that we were not privy to, because this conversation has never taken this turn. And perhaps we are also at this point because of the Gazette of the 12th of December. But Chair, please, can I just, as a way of following up, Mr. Anush talks about them acquiring a mail sorting machine. Is it correct to say that that was late last year? Hence, we saw the improvement. If that is the case, why was that exercise done over a year later into the BRP process? Because if this was seen as a core business or as a lifesaver for the post office, for me, that would have been one of the priorities as they went into the business. And are they at liberty to tell us what the revenue was, at least from 2023, since they took office? And we have seen from the slide of Mr. Soli that they are now sitting at 78, and they have explained the magic. But previously, what revenue did the post office make from the mail delivery? And with the procuring of the mail sorting machine, has there been a serious return on investment? And this is noting that there is conversations about breaking even. Would that be a sustainable model for the post office? And again, we're talking about everything and every investment that is being put into the post office, having to take the post office over the line. Chair, I think, and I do appreciate the explanation by Mr. Anush on the obligations that they have as per the court order to carry out their agreements with the creditors and that the post office had in terms of making payments. It has always been the conversation that a plan was necessary. And I also hear him saying that what the obligation that they had as BRPs was to implement the business rescue plan. I remember conversations in this portfolio committee about them being responsible for a future strategic plan. I don't know what the words are, but a future strategic plan for the post office. I hope I am mishearing him when he says that was not something that was required of them. And I think I'm understanding him to say it would have been a nice to have or an added service on their part, because then we have a problem. Because we cannot start having a conversation about an exit strategy when the business rescue practitioners who have been at the head of the operations of the post office for at least the past 2 years are not speaking to a strategy, let alone an exit strategy. And perhaps to avoid a back and forth, this is something that the business rescue practitioners can really assist and empower us so that we are really empowered in terms of what our understanding is. In the same breath, Chair, with the acquiring of the mail sorting machine, can they then confirm if the backlogs have been addressed? Perhaps this is also part of the magic that has brought us to 78%. Are there any backlogs? And one of the things I really, as Mr. Soli was speaking about the 1,600 bikes that have been also procured, it would be interesting. I'm not expecting an answer now to just an average age of the postman, because I don't know if this would be something that our young people are really having ambitions of doing. Perhaps just to empower us as a committee to say, what does the postman of today look like? What is the average age? And do they see a future in the work as a postman? And how sustainable is the post office with 1,600 bikes, with the understanding as well that the postmen were saying they don't want the bikes, but they prefer the bicycles, the ones with the motor, but they just prefer the conventional two-wheelers. So I'm not sure if he could also clarify when he talks about bikes, is it ones with motors, or as we were previously informed that they prefer the bicycle as it were. Check. Mr. I don't want to mispronounce your name, sir. Mukove. Mr. Mukove makes very high level speculations this afternoon in our meeting. He talks about Postnet, SA Express, and Take a Lot having been at the RFI briefing. What about their presence gave him a guarantee that they would have been interested in partnering with the post office, whose lunch they have eaten over the years? I'm not sure if perhaps you want to give him a minute to really tell us, was a conversation had with post office, with Postnet, SA Express, and Take a Lot, that then they would have expressed their interest, because then the conversation changes. And I don't think this is what he said, but he just really made high-level speculations about their presence and how that would have been perceived as them being interested in a business with the post office. Chair, he also talks about the 3rd of December, Take a Lot making amendments to their court papers. He again has not given us any information about a concrete information about what those amendments would have been. It's another high-level speculation that is being given to the portfolio committee, unless he is able to give us more information for us to really be at the same bandwidth as himself. And to hear that the post office was owing a service provider in the services of a legal firm 3 million rands, which Mr. Mukove says he was instrumental in making sure that those fees are paid. It's exactly the conversation we have been having the whole of last week, where we have government entities that are having large line items, as in 3 million rand on legal fees, which is not their core business. That information is really problematic, Chair. And I do understand that as it is water under the bridge, as it were, but I would really like, if you can, Chairperson, direct answers on the issues I have raised. Thank you so very much.
Thank you, Honorable Bodlani. I did note that the minister would have asked, would have been the DDG or the acting DG to respond to a question surrounding the board and the appointment of the board. So maybe after I ask my questions, my follow-up questions, I'll first give the acting DG or the DDG to respond. I can't recall who the minister had directed to respond to that regarding the appointment of the board. And whilst you respond to that question, I'd like you to then give the portfolio committee a clear time frame for the appointment of that board and then the appointment of executives. We can't have a scenario where we're talking of exit strategy, but the appointment of the succession plan is not time-bound. That would be remiss of this committee, so we need to get clarity on that. I must say that, the question I would have wanted to have asked Anush is, have we moved away from liquidation? In your presentation to us, you mention, and you often mention, that you praise the progress of the introduction that the BRPs have done, and we welcome that. It never comes for free. Often this portfolio committee speaks of how much of taxpayers' money has gone in, and I think we still have 5,700 jobs, and I think the financial results are spoken. But the question for you as a follow-up question is, have we moved away from liquidation of the post office? I think you've answered the one question I would have wanted to have asked you around the impact of that removal of the exclusive right. That would have been a question in which you said that the implementation strategy that we had in that closed session around the 1.2 kg that would be compromised with that announcement. Maybe then coming to the minister. Minister, I must admit, I'm not impressed with the way you have managed the gazetting of that decision of yours. Once again, Minister, I have raised this with you in this portfolio committee, that you had made this announcement at the closure when Parliament was closing. And I thought that was inappropriate for such a significant decision to be made at that point in time, when this portfolio committee has gone into recess and we won't be able to call you to account for the decision you made at that point in time. So maybe, and there have been other decisions and announcements you made at the time when Parliament had closed. Minister, such a material decision, I mean, you heard your colleague, the Deputy Minister, says that's where he differs with you. You've heard the BRP say that the implementation strategy of the 1.2 kg that was discussed as a strategy will be compromised. You've heard the legal guy speak about it will negatively impact on the recovery strategy. These are comments I've noted from members of the entity. The question for you is such an important, and you said it was informed out of a market analysis. Consult. I mean, given the fact that the RFIs were being taken in December, given the fact that we were working on a turnaround strategy, did you consult stakeholders? Did you consult the post office? Did you consult the BRP? Did you consult your deputy minister? I don't know. Did you consult ICASA before you made such a decision? Because I'm saying, and I'm arguing, what I'm saying is that was a reckless decision, because what I'm seeing, that decision, the stakeholders that are coming to us here are saying that that decision is going to harm the existence of the post office. Because we've heard that postal and parcel revenue increased by 4%. And the core, and I would imagine that that last mile of delivery to the most rural of people, that is done by the post office, because the take-a-lots and the postnets, etc., don't have a point of presence in those areas. But that's something we're taking away by that. So did you consult? And would you then think, in light of what we've seen here, that would have been and then there's I think the legal guy has spoken about 3 million spent, and I think Honorable Botlani, I'm not responding for him, but I think he was talking about defending this matter in court, this matter, I think, regarding Postnet, regarding the exclusive cause, and he said prior to BRP there would have been more. I'm not too sure how much it is. I don't want to speculate. That would be wasteful expenditure because it's muted the entire case. Minister, do you think that was a wise decision that you had made? And did you consult, and did you think it was a wise decision? And would you then finally consider retracting that in light of the impact that we've heard from people on the ground that it could possibly have on the post office? Let me let the DDG or DG to respond, or rather, let me just let Anush, you to respond on, are we moving away from liquidation? Then we'll allow the DG and DDG to respond on the question around the board, and then we go to the minister.
Chairperson, thank you. I will respond to that. There was just a question on the mail sorting machines. With your permission, can I also respond to that at the same time?
Please.
All right.
Please.
Thank you, Chairperson. All right, so just the easier one, by the Honorable Member Botlani, I think you've misquoting me. I'd like to correct you. We did not buy mail sorting machines. My comments were everything was at a standstill. We had to do repairs to the mail sorting machine. Now, bear in mind, we started our jobs. The entity was placed into business rescue in July 2023. The plan was approved on 7th of December 2023, and that's when we could effectively start implementing the plan and making decisions. So between July and December, all we could do was just preserve, because we didn't really have a plan to implement. Once it was voted on, by the affected parties. Our job is to implement that plan. And then that's how we slowly started activating. And that mail sorting machine was lying idle. Nothing was moving. There was dust everywhere. People were not working. People were not reporting for work. It was absolute chaos. So my comments were we had to slowly start activating parts of the business with whatever little money we had. And one of the things we did was to repair the mail sorting machine. So I just want to correct the misunderstanding there. And then secondly, a very key project was supporting the RTIA, the infringements, and that's the ARTO projects. That's when, again, through our efforts by receiving and improving our collection efforts from neglected debtors and so on, whatever money we had, we then ran an RFP process and we bought high-speed mail printers. This is critical to support the ARTO project because this is part of the hybrid mail business where we need high-speed specialized printers that can print volumes of these letters that we package and then post on behalf of what we refer to as a bulk mailing client. So that's where the investment has gone through. And again, these are all audited. Like I said, we audited by the Auditor General, and yeah, they've looked at all of this. So just to be clear, this is how we had to slowly scrape up revenue and investment because there's no money. We did not receive the 3.8 billion. And I just want to emphasize again that the 3.8 billion was not a request from the BRPs. It's not a bailout. This was always there to be received. That was in the application to place the entity into business rescue. We included that into our business rescue plan. So it's not a bailout. It's not a request. This is not the BRPs asking for this money. This was supposed to be made available by the shareholder to this entity for us to implement the plan. And in implementing the plan, we made key assumptions that that money would be received, the future-proofing aspect, which is the turnaround aspect, that was, once we had allocated the 3.8 billion to fix properties, to buy vehicles, to do X, to invest in the IT infrastructure, to support the digital strategy, etc., etc. That money never came. So as a result, that was when we had to say, okay, we need to be doing a bit more here, although it's not our job. And that's why I said, and I'll say this again, we worked with management and then crafted the turnaround strategy document. So whether it was required or not, I think it's irrelevant because we did it and we wanted to do it. And the reason why I made that comment is because in there, we had researched and benchmarked the post office against other global postal operators. We looked at the declining businesses and the revenue sources and what they've done. We've benchmarked all of that. We've even had certain engagements, informally, with some postal operators that we're keen to partner. But again, and we pursued partnerships proactively, not necessarily by issuing an RFI, because at that stage we were not ready. We didn't have the money to do the basic upgrades to properties. The plan was to get the 3.8, make these basic upgrades, and then run a full-on RFI, RFP process, not the other way around, which is what we had to do. So let's look at the reality now. We did not receive that money. We had to think on our feet. Obviously, with the support of the department, the RFI process did go out. Okay. So yes, and unfortunately, then we had the sub 1 kilogram matter that had come on board. So we've answered the question. Did the sub 1 kilogram decision affect the post office? Of course it did. Yes, it did. Yes, it has. And the point I was making is that we had modeled on still having that monopoly to generate revenues in the future. That's part of the turnaround plan that looks into the future and the forecasted revenues that we had. Now, by not us not having that monopoly, that's a key assumption we made in that future forecast. We now have to strip that away and look to replacing that revenue with other types of revenues. Right. So then, which brings me to the chair's question. Oh, sorry, apologies for that. You also spoke about the backlogs. We, through our efforts and working with management, we cleared significant aspects of the backlog. In fact, the international mail was the first where there's no backlogs. On the domestic mail, yes, there were some challenges, but again, by and large, we've significantly reduced a lot of those backlogs, right? And I can say that we've done that's what contributed to the improved delivery standards. Is it a 95%? No, we've said it's not, but it's still at a high level of 70% plus. At one point, it was 80% plus. So I think that's answering the question on the backlogs. The question from the chairperson: have we moved away from liquidation of SAPO? The answer is no, we have not. Because again, the business rescue plan was premised on receiving 3.8 billion. We have not received that. An allocation of the 3.8 billion was towards the working capital requirements. In other words, the ongoing day-to-day expenses that we need to cover. So by restructuring the balance sheet through the compromise, our assets exceeds its liabilities, which means we are technically solvent. From a day-to-day ability to pay creditors as and when they fall due, through our initiatives, we've been able to do that. But we could only do that up to a certain point. The 3.8 billion, the reality, it's not there. We had earmarked a portion of that for working capital deficits, which we foresee also coming to play. You've seen the loss position that we've presented. Lenny did highlight the working capital strain. So if we don't receive that money anytime soon, or part of the, or funding, so shall I say, funding for working capital, unfortunately, we are not away from the liquidation scenario of SAPO. So Chairperson, that's the long and short of it. Thank you.
Thanks, Anish. Anish, let me invite, I don't know whether you're legal guy, because I recall Honorable Bodlani made some comments on Mr. Makove. I wrote his name down properly. You have any responses, Mr. Makove, our legal person?
Maybe to put it first, with all due respect, Honorable Bodlani, I'm not speculating. You might have heard, but I think you misunderstood. We oppose that because they did not. The Chair?
Sorry, Chair, we really miss Mr. Makube. Maybe you could just switch off his video.
Mr. Makove, you can switch off your camera and go back to misunderstood. You have heard but misunderstood, referring to Honorable Bodlani.
Okay. Am I clear now, Chair?
Yeah, boy, you are clear, sir.
Okay. I was saying that she might have heard, but I think she misunderstood what I'm saying. On the first part of the amendment, I specifically said that Takealot has given us a notice that they want to amend their papers. They did not tell us what amendment they're going to put in their papers. Even to date, we are still waiting for that amendment. We opposed it and told them they must disclose in the amendment what is it that they want to amend on their papers. So at this point, it's not a speculation. It is a fact. I've got a notice. It's there in court. If the committee so wish, you can give it a notice from Takealot saying we want to amend our papers and our opposition. That's one. The second thing is, how sure are we that Takealot would have wanted to partner with us?
Honorable Bodlani, you need to mute, please.
So so Chair, sorry, Chair, I'm asking for a point of order. That's
Okay.
exactly how I understood it, and that's exactly how I said it. So Mr. Mukove and I are exactly on the same page. So no, I did not misunderstand him.
Okay, noted. Honorable Mr. Makove, you need to clarify, please.
Okay, I take it she was saying she wants to hear what the amendment is, and I'm saying we don't have the amendment, so it's fine. If we are agreeing on that to say they gave us a notice saying they want to amend, then it's fine. I'll take that, Chair, and I'll withdraw that back.
Okay.
Then,
so maybe on
Chair,
my
the second thing.
Proceed.
Then the second thing was how certain are we that they would want to partner with Post Office on that market? Chair, we are very much certain. Takealot has been one of the key entities that has been upfront with the Post Office. I think at some point they were even piloting 4 sites. We have meetings with them now and then. We have presentations with them on this issue. So it is not a speculation. They've approached us and they've said they are interested in doing 1, 2, 3 with us. So we know that for a fact. And I think the last one, Chair, it was on the amount of the 3 million you answered. I think you answered before I even came. It is the amount that we pay as and when the case is going. They will tell us, we did this, we did that. Then we will have to recommend. Obviously, someone must recommend for payment. Was the work done? Yes. And then the payment is made. I'm talking the 3 million. I'm talking for the amount that I personally had to sign as the interim head of legal to have those payments made. There are other payments that were done even before my time being there. So that's what I was talking about, Chair. I think those were the three issues that I was called upon to respond to.
Thank you so much. Thank you so much, Mr. McCoven. Maybe on my side, and you don't have to answer this, you can always, respond to us in writing, is that on the matter that you have been unable to answer, Ms. Honorable Bodlani, maybe I'll state, I want to add a question to that, is that I would like to know from you, from a legal point of view, the impact of the minister's announcement in the Gazette. How has that affected the legal matter gone to court? I mean, simply put, as a layman, has the Postnet used that announcement to alter their position in court? I want a factual response that on so and so day they submitted court papers and they did this and cited the Gazette. This committee needs to understand the impact of the Minister's Gazette on the legal outcome and how those guys would have used it. So I think that clarity needs to be found. Right now it's speculation. We need to get a factual response. So thank you so much. And maybe as I invite the DG to respond, or DDG, or the person that the minister had referred to, as I invite you to respond, may I also then, there's another element that needs to be responded to. Yes, Honorable Bodlani, your hand is up.
Chair, I'm sorry, my network is bad today. Are you saying that we must be furnished with information about how Postnet would have amended, or Take a Lot would have amended their court papers, but by the Gazette by the minister?
Correct. That's correct.
And
that's what I would
sorry,
like to
as
know.
a follow-up, Chair, if now I understand you correctly, how are we going to get that as a factual answer from Post Office?
I think it's a court paper. It sits in the court. I think it's public documents. That's my understanding. Is if they served it in court, that's a court document. That's my understanding.
Then, Chair,
Okay.
I'm not in the same wavelength as you. Can I carry on?
Sure.
The Gazette, the Take a Lot wanted to make an amendment on the 3rd of December.
That's
And
to the
the
RFI.
speculation, yes,
That's to the
and the
court paper.
speculation is that the Gazette of the 12th of December hindered what they would have wanted to do. So now we are asking Post Office to give us the court papers on what Take a Lot would have wanted to amend.
No, we
Maybe
asking a very
simplify that for me, Chairperson. I really am lost.
Very simple. I'm not speculating the third. I'm not linking the third. My argument thus far has been that announcement would have had an impact on both the RFIs and two, the impact on the case that was already before the court. Regarding the matter already before the court, my question is simple. How would the posted, whoever's in court, used that announcement, that gazetted announcement, to amend any papers in their case? How would they have used that in their favor, I'm assuming, in the matter before court? It's a very simple question, and that information can be obtained. My understanding is from the court. If one serves like a responding affidavit or something, I think that is available from courts.
Chair,
Okay.
I think we are speaking past each other, but please note my objection to that, because I think we are just asking for further speculation. Thank you so much.
Okay, thank you. So as I asked you to respond to this, the DDG, I did ask the question, how many RFIs were received and what was the impact of the announcement of the Gazette on the RFIs? That answer was answered part by the minister, in which the minister said between 80 to 100. I am concerned that such an important matter as RFIs, which we have been waiting, we don't have a firm number. So I'm hoping you would give us a correct number of RFIs received. And the minister is also, in response to what was the impact, indicated we don't know the impact of it as yet, because we are still processing the RFIs. So my question then would be, are you aware of two instances? One is persons who had submitted RFIs and now they want to amend it post the announcement of the Minister's Gazette. And two, when will you have be in a position to come before this committee and give us a feedback on the RFIs that you have received. Even also noting that you will be responding to the what's the process to appointing the board, and by when would you appoint that board? Thank you.
No, thank you very much, Chair and members. So I'll start with the request that the minister made earlier, that I outlined the process to appoint the board and also update on where we are in terms of the SAPO board. So in terms of the process, it's run by my colleague, DDG Shilem, and his team on the governance. My understanding of the process is that, because they will have to do an advertisement after getting approval from the minister. And then whilst the advertisement is out there, people responding, they also commence with the process to constitute a selection panel. Thereafter, after the closing date, and then they have finalized the recommendation of the selection panel, which then is approved by the minister. The selection panel will then convene a meeting, or more than that, depending on the respondents, the number of responses to that advert. And then they'll go through a process of reviewing those submissions, and thereafter make a recommendation to the minister. And the minister will, of course, then that's done through the departmental colleagues, will review that, and if there are issues, will also have engagements with the team. And once that's finalized, that process is finalized of the recommendation, the cabinet memorandum is then submitted to cabinet for consideration and approval for appointment. And then, of course, then after that, there will be an announcement of the board members. So with regard to the SAPO board, all the processes have been concluded up to the level that the selection committee has reviewed the applications and has made a recommendation to the minister. And where it is, as far as I know, is that it's between the minister and cabinet to arrange when it will be tabled before cabinet, and thereafter then there will be an announcement of the board. So from looking at the process, it's almost at the end of the process, just awaiting more the cabinet approval of the board. That's where we are with regard to the SAPO board, which then will also kickstart the process of the executives to be appointed. And then on the second question that you asked, Chair, in terms of the RFI, which was running in December, the RFI closed on 15th of December, and I think the Gazette will have been on the 12th of December. So it will be difficult for us to assess at this stage to see who will have wanted to submit and then withdraw based on the Gazette at this stage. However, we have received 97 respondents, and then out of those 97, there are about 120 proposals, which means that there are some entities who will have submitted more than one proposal, meaning they will want to partner with SAPO on various areas of the business, because the RFI was opened, was looking at the entire business of the post office, and people had to identify areas where they could partner. So we have got 120 proposals that are being assessed. The assessment process, as Mr. Anush has indicated, is underway. The team has already grouped the different responses into categories. For example, we've got those who are interested in digital services, there are those who are interested in just the property services, some in courier services, and some in postal services. So we have grouped these responses into the different areas so that the analysis can be finalized, and then the next steps of going on in a request for proposal in terms of which areas are aligned with the post office strategy and which areas are probably quick wins and can also result in improving the business of SAPO in the short term, some of them will be long term. So that's the analysis that's underway, and it's driven largely by SAPO because they understand the strategy of SAPO and also the experience that they have, but supported by the department. So that's where we are in terms of the process, but we have not received the request to withdraw their submission at this stage. Thank you, Chair.
Thank you, DDG Ngobeni, for your responses. I see DM Gongobela, your hand is up. Maybe let me take you before we'll then afford the minister to respond. DM Gongobela.
No, thank you, Honorable Chair. I'm not going to repeat what I might have said before. All I wanted to say, maybe there's 1 or 2 points I wanted to emphasize. That we should remember that as the BRPs were adopting.
DM, can you switch on your video, please, DM? Can you switch on your video, please?
Okay. All right. As the BRP were convened a session of the stakeholders in December 7th to adopt a rescue plan, it is that plan that reduced what was owed at a level of about 9 billion down to 1 billion. Again, if you look from now, because the liquidation indication was about March 2023, it's almost 3 years now the post office is staying afloat with all its challenges, but it has been kept afloat. The other issue I thought I want to confirm, because if it is explained by BRP, it may be viewed cynically. Honorable members must remember when the cabinet took a decision to opt for a rescue compared to liquidation, it's because the country could not stand a situation where the post office is closed, taking into account that the millions of the poor people who are poor, unemployed, and who are far-flung it's serving. Therefore, the cabinet took a decision that we rather go to court and apply for a rescue. To do that, there are conditions that you are supposed to table before court. One of them, I think Honorable Member Bodlani must have spoken about it, if I'm correct. You have to demonstrate a turnaround strategy before court. 2, there must be a commitment to fund the rescue. 3, there must be a demonstrable way on how equitable at a limited level are you going to service creditors. 4, they must demonstrate how services are going to stay afloat. So 3.8 billion is what was committed by government. And I want to confirm what Anush says, that it is not a bailout. It's what government committed. It was on that basis that the court accepted the rescue. And as a matter of fact, it is correct and honestly important to accept that it is one area that did not make the work of the rescuers easy. Of course, it's not that they were perfect in everything they were doing, but it's important to state those facts. Those are the few issues, Honorable Chair, I wanted to say. On the sub 1 kg, I stand by the points I raised before. Thanks.
Thank you, GM Gongobela. Let me then allow Minister Malaksi for his responses. Minister.
Thanks very much, Chair, for the second opportunity. Just that I think DDG Ngobeni has dealt with the accurate numbers, particularly around the proposal. I wasn't being speculative, Chair, when I mentioned that there were 80 to 20. I didn't have the correct number at the time, and I didn't want to be reckless. But those are the numbers that have been shared. So that is key on 2 fundamental things, Chair, which we will have divergent views on it, and that's all fine. One is the matter of the consultation, and I think it's important to have this conversation in totality. I preface the conversation by indicating that one of the first steps taken in the process was the publication of the policy direction around the suitability or continuation of the exclusive rights as stipulated. And that went for public comment, Chair. There was comments and there was responses, and that is an important leg of that phase, because there is often the risk that emerges in this conversation, which is understandable because we are all different human beings who've got, different interpretations and viewpoints about matters, of saying simply because a process produces an outcome that is not compatible with, one's outlook, therefore the process to get to that outcome is somehow delegitimized by that or not compliant, when in fact nothing could be further from the from the truth, because the reality of the matter, as I indicated, is that there were a total of 7 submissions in response to that policy directive, articulating different responses, which, when distilled, you had 2 groups. One, recommending a review of the exclusive rights, particularly for small parcels, as part of liberalizing the market and opening it up for competition, and 2, a maintenance of the status quo, and also acknowledging some of the challenges in that regard. So I think that deals with the issue of not being consulted, because this wasn't something that emerged out of nowhere, and we run the risk of creating that impression simply because we hold a different view about that outcome. And then secondly, Chair, it's something that you mentioned about you not being impressed about the timing. And with due respect, Chair, I think again here we run the risk of entangling each other into overstepping our distinct legal mandates. I have no authority whatsoever to express, requirements about when the legislature in the form of the PCC should conduct its business, or how long that business should be or meet. I may have views about it, but if the PCC calls me to account on a Tuesday or on a Friday, I will be there. And there hasn't been an instance in which the PCC, for instance, required me and I wasn't there. And if there'd been an instance where there was incompatibility of schedules, we've indicated that. Because, again, the impression can be wrongfully made that the timing was to evade parliamentary scrutiny and accountability, which isn't the case, because we are here, right, dealing with that accountability to this House, because it's part of the responsibility that we do, and nothing can happen without these interactions happening. So I think that for me is an important element, Chair, because sorry.
No.
Oh,
you can
okay.
continue.
No, I thought there was an interjection or something. So I think that for me is the essence of my views, because I mean, I get in the spirit of the cooperation between the legislature and the executive that ideally the goal would be that we are taken into confidence on each and every action along the journey. But I think there is also very distinct mandates that we have, and issues around the timing of decisions and how decisions are made. If we start being prescriptive about that, I personally feel that it's impractical, and it would undermine both what we are trying to do in our respective responsibilities. And Chair, I need to clarify that point, because I don't want the wrongful impression to then be made that therefore what the PCC says doesn't matter, because that isn't my attitude, hasn't been my attitude, and will never be my attitude. But there will be, as there's been in the past and as there is even on this matter, instances where, on the basis of evidence that we both have from different angles, we do not agree with a particular decision. And that is not, an unusual development, because it is important that we both, get given the spaces to execute the responsibilities that we have, and that we do so responsibly, and where, as the committee has always and never misses a chance to ensure that there's accountability here, we account. Otherwise, we're going to be caught up on what could be reduced to personality preferences, which, I know for sure, Chair, just based on the interactions we've had, it's not your focus. It's about dealing with the issues, and we deal with the substance of the matters rather than, style and form over a period of time. So, Chair, I thought that that's important that I deal with those in fairness, because you had raised it. But my view is that we have distinct mandates, and we are empowered to come and account to the portfolio committee whenever the PC, determines, and we've never shied away from that. I think we can have endless conversations about, stylistic approach to conversations and matters, that won't lead us, to a productive destination if we want to deal with substantive issues. But I wanted to highlight that the consultation was done in the manner as prescribed in the process that is required, with publication of comments and this, and most importantly, which is something that there's often experience, Chair, and I think I would ordinarily not do this, but given how the conversation has evolved, I think it's also an opportunity to have a wholesome conversation, and for everyone to have a sense of the picture of, even when there is internal assessments being done. Let's say, for instance, the work that the department did on the market study, and also a review of those submissions and the views of that. There's no one, the department, who could claim that, in the chain, they were unaware of that work, because there is a internal channel in terms of how documents eventually get to the ministry, so that everyone has line of sight. Whether that is exercised throughout that chain, is people's discretion. But it is important that, because we don't deal with, and my approach is not one to always have surprises out of the blue, although some members may have a different view about that. But that isn't my approach. Thank you very much, Chair. I think you are still muted, Chair.
Oh, sorry. One thing is for sure, every time before we go to recess, I'll be calling for the Gazette to see what the Minister of Communications is publishing. That's on a lighter note. But thank you. But what we can agree on is that we're here to serve the public good.
Can I make a point before you close, Chair?
Yes, dear DM.
If you don't mind, I think it will be important for me, as a matter of fact, that I had no line of sight to the decision on the Gazette. If there are records to demonstrate that, I will make that submission and correct myself. So where I'm sitting, I do not have a record of me having a line of sight to that decision. Thank you.
Okay. Thanks, DM. So from what the minister's responses has been in response to my question of consultation, is the minister has said that the publication or public comment, that was the consultative process, and that document there goes through the internal processes of the department, and someone would have had line of sight. That was the response to that consultation. Of course, he's indicated that the expectation that there must be broader consultation, as I had asked with ICAS, etc. From what I understand in the response, that's not necessary. What's necessary was this formal public comment. So we'll park it off there. except to say that what we can agree on, as I said, is that we are here to serve public good and the people of our country. And you will always find in this portfolio committee robust debates of this nature. It's now almost 1521 that we will hold the executive accountable and will not be shy to ask the right questions. Thank you so much, colleagues. Thank you so much, honorable members, for the very robust conversation. It certainly doesn't end here. Unfortunately, what we have gathered out of that gazette and out of the interrogation that took place here is that that will impact on the monopoly and the exclusivity that the post office has had. How that plays out remains to be seen. And I think our mandate was really to lift that and try to understand its impact. And I think, thank you all so much for the very robust conversation. And I think we have to meet again at Friday at 2 p.m. when we will receive the departmental response to the funding model for the SABC. Thank you so much. This meeting is now adjourned.
Thank you. Thank you, Chairperson.
Thank you, Chair. Bye.
Thank you.